What's up, everybody? Good morning. Good morning. What's up? Woo! All right. Good afternoon. Oh, good morning, good afternoon, whatever time it is for you, wherever you are in this world. Let's get ready to get going. What's up, friends? All right. What's with this big old gap up we had today? Somebody market gapped up, ran straight to DD bands. Any question? I have questions. Any answers for my questions? What prompted the gap up? Trump was speaking over the weekend. Was there anything that was going on? I'm not gonna lie, I've been Halloween partying, so I haven't been paying much attention to what's going on in the market. I tried to catch the news. I read a little bit about some Israeli airstrikes affecting the price of oil. But, what's going on in the marketing? Everything popped. Gold, crude indices. Yeah. Was this all in the same wavelength here, or was there something different for indices? Yeah, I read the part about oil. That doesn't make a lot of sense, but relief rally because of Israel strike. So that's basically what it was, right? All of it was Israel. Yeah. I need to clean my glasses real quick. Hold on. Right back. Let's go. Let's get up. Let's get ready. Let's do this. All right, so today of the day. Okay, so let me tell you something, an interesting dynamic about trading competitions, right? Trading competitions are interesting because, and the last week is always the most deciding week. I've been in the top 5 for a while. I was in the I started a week late, number one, so I wasn't able to develop a natural commanding lead that I was hoping to have at least, but I did manage to make my way to second place as of right now. The problem with trading contests is as follows. There's a mathematical dynamic you gotta fight. That dynamic is pretty simple. It's anybody that's not in the top 10 is probably given up by now, with the exception of one key fact. And that key fact is there's always that, because if you haven't won, usually you lose your motivation. But a lot of people go, well, you know what? Let me just go all in and see what happens. It's either top leaderboard or bust. And a lot of times in trading competitions, especially ones that are using prop accounts, right? There's no real risk. Once like the Robbins Cup, people wouldn't necessarily do this, but I probably would. But if you're not it's like Ricky Bobby say if you're not first, you're last. In a trading contest that has prizes, that's kind of the same thing. If you ain't first, you're last, right? Mark it up to 2 minutes. So what might happen is typically in the middle tier, people in the top 30, 40, something like that, have the ability to just YOLO full port their account and actually just luck into the leaderboard. So a lot of times you'll see a lot of new names just pop up, first, second, and third, who you didn't see until the very end. And it happens a lot of time if there's not enough time for the first place to have a commanding lead, such that the position size maximum doesn't allow it to happen in 2 or 3 trades. In fact, this contest position size maximum allows it to happen in 2 or 3 trades. The difference between first place and 50th place can be accomplished in literally 2 or 3 days. So what it does, it forces someone like me to have to trade even harder. To even make it. So keep that in mind. Don't forget to smash that like button, friends. In the YouTube stream, let's go. So essentially, you're kind of forced to overtrade because other people will likely overtrade. The lead's not big enough. Matt, did I attend the Harris rally? Oh no. I don't do politics. I don't do politics at all. No, I would never go to a political rally. I'd rather pour burning lava in my ear. All right, so today market open, we have monthly hedge pressure dynamic 58.21, 58.62 on the weeklies. We're battling at DD. We know 88% of days does like to stay below here, and only 4% of days will close above there. So we'll see what happens. Right at the open. NASDAQ kind of popped already through its CD band. Now it's trying to pull back in. We're going to see how that turns out to open up the week. Big gap up and continue to push higher. We have a rule that I don't chase longs outside of here, and I don't necessarily reverse or short that if this ratio is greater than half. You guys know the rules there. Jason says, you do have a question about overnight dynamic hedge pressure. Why does the calculation begin from the prior day close versus the current day higher low open? So dynamic doesn't use today's open. It's the previous day's close, which is the futures close, plus and minus 1 risk interval, and it's the number that you get in this table right here. So maybe Jason, maybe rephrase your question a little bit, because oh yeah, big earnings in tech this week. So this is a big heavy tech week, so we're gonna see a lot of movement there. I guess pre-populating for some of these after-hour tech earnings. All right. Questions. Look, the calculation is looking at when there's a dynamic that talks about how much risk that the futures market will take in the overnight session between the time that our market is open, our market is closed and open. So an example is when the equities futures are tracking the index. Well, the stock market is closed for a certain period of time. So in the time the stock market is closed, the equities futures are moving around from that period of time without the thing it's tracking, right? It's like a rubber band can stretch away from reality, and you really don't know what's possible there because it's going to have its own valuation, right? Okay, market's open here. And so what risk intervals look at is how far that expected range is. And there's a magic thing that happens is that typically you don't move greater than this green line distance in the overnight session without there being a very damn good reason. The market does not want to break this. As you see, it's such a good number. And we give this to all our subscribers. This is an exploit of margin requirements, if you didn't actually know that, which is even cooler. We figured this out a while ago, that margin requirements aren't just random numbers. They're actually meticulously calculated. And from the margin requirements, we extract razor sharp effing pivots, baby, right there on the edge. All right, let's get so the idea is that the market only moves so far in the overnight session without putting up a pretty damn good fight. It has to do with the risk of reportable positions. There's a whole neat thing. And CME Group created a program called CME Span. So we exploit that. We actually reverse engineered a program they use to calculate those margin requirements, believe it or not. Ooh, that bull long up. All right, bulls on bottom. You guys know the rules. One trade, everyone knows the rules. Now I'm starting to sound like Portney. All right, right down here. Boom to boom. We know this. Okay, there's always pressure from here to here, the halfway point here, right at the bull zone bottom. Let's take a look at QQQ. So I'm long in right there at that bull zone. Now it's like similar boat right down here at the bottom. Yeah, so the reason it starts at the overnight is that we look at the moment that the futures Globex closes, which is 5. And then we run the calculation in that time before the futures Globex opens. All right, so taking a look, this is also bullish to today's setups today. Always is a trade from here to there. Always. Halfway point. There's always a trade from here to there. I take it every single time. I'm gonna let it pull back. Fly's looking pretty all right there. Let's take a look at VIX. VIX is in illiquidity pocket. Be careful. This is downward pressure on VIX, so we can have some big ups today. Big ups. Be patient on this one though. I'm gonna hit my pivot and be done. Week looks very bullish. All right. So we also know the drill is that in futures, while we are sitting really close to that entry point, I'm gonna kind of put it right down here. In futures, unfortunate as it is, we learned this on Friday, why I don't trade outside of these bands. Only 4% of days will close outside of these bands. 88% will close inside the bands, and then 8% will close on the bottom of the other side. So I don't normally take the bet. Market stretches that far without a really damn good reason. And then down here is 8%. This is all of our back test stuff. So this is real numbers. So I don't necessarily short this either. This ratio is bullish enough that I actually sit out on this short. I'm more prone to believe that this market is rather, like on Friday, like it dips in and it comes right back up to the top. I don't bet that this reverses, even though a lot of our folks here will take bets inside of here. It's just the problem is you don't know how high it's going to go before it tucks back in. Ooh, friends in YouTube, hit that like button. Don't forget, we're live. We're ready to go. You guys are watching the real #1 trader on YouTube. Well, #2. We'll see if I can be #1. Referring to the trading competition, Elite Trader Funding. If you guys haven't checked them out, by the way, there's a code you can use. Rocket Scooter. You get 50% off all evals there. I encourage everybody to use it. If you haven't tried out Elite Trader Funding, they're dope. We're started working with them now, so I really love their company and what they do. Use that code from now on. You guys in the Rocket crew, Rocket Squad, Team Rocket, whatever your bag is. Useful. Okay. Very useful. So inside of here, we're going to let it pull back before we do anything. No diddling in the middle. The resilience numbers are positive, which is good enough to mean that we will get some kind of support in here. This is not a short setup date. DD ratio is greater than half, so this is really solid here. Let me get some footing really quick on where those bands are, and I'll convert this. So I have a SPY chart, and I'm trading or NASDAQ chart. NQEP is right there. Okay. So let's go ahead, and since we're going to talk about any condition just at this line, 4% of the case we're up there, and then 96% of the time we're down here. Right here under ideal conditions, which you do have today, is a 90% chance we bounce. So it's going to be really fun. Simple setups today. Nothing crazy. The trades I do want to take, I don't chase the break. Unfortunately, when the market, put this right here. When the market moves outside of here, I usually sit out. This is Matt's rule. Matt, sit out. Because the high probability we tuck back in. Yeah, I sit out. I sit out on the breaks there. I always trade from here to there. There's always that little move right here because this is the halfway point bull zone and hedge pressure, there's always a little scalp. So there's a support here. Or that ratio greater than half. When the resilience number is greater than half, support from here to here. So pretty much rock solid. The market's gonna fight inside of here for a little bit. There's some good eats inside of this. You're hungry. I'm gonna grab myself a snack. A couple little scalp trades inside of here. I don't know if I want to. Nasdaq's in a similar boat, so we're gonna look at. Which Nasdaq's like in the same exact setup here. Similar setup. I'm going to pull back and I'm going to grab that dip as soon as we get it. Bouncing at edge pressure and bull zone bottom. Down inside of here, down off of that. I know man's land in the middle here. QQQ bouncing 496 is likely the part, so wherever that ends up being in futures. I'll tap that long when it grabs it. Ooh, Nasdaq resilience is negative. Ooh. Remember, the resilience number is the desire for this to fill its gap this way, but we know that the zone bottom typically interrupts that. That's going to be strong enough. So remember, resilience negative is going to want to pull this down. Bull zone bottom is going to want to pull this up. So let's wait till we get that bottom. Okay, so today's movement is there are trades, rock solid trades off of each one of these pivots. Pick one. And overnight, we did gap up a little tiny bit. So let's go ahead and check this out wherever this gap was. There's always a happy medium on, let's do between where we are, where we gap. Just kind of put a little line there. Good point right here. Just for the bull side of the market. It's a dip to buy today. Okay, come on, let this guy pull back just a little bit. The 862, yeah, that's probably about it. Nice tight little day here today. Yeah, I don't normally short because that ratio is too high enough. Like I'm actually waiting to get a bull dip. So what I think that we get is maybe 1 or 2 hours down and then we're back up. This is a pretty solid bull setup today. Ooh. Did you have a good weekend? Good Halloween? Good anything? Halloween's coming up, I guess. Halloween parties, anything fun? I pull back. Somebody be watching Qs. So the way we do it here is we trade futures, but I usually draw everything on a QQQ chart. Keep all my information like in the same spot. Easier. So right at the start of that candle is about where the D band was. There's that pullback. Let's go. Let's go. Let's go. Looking for this bull zone bottom, similar spot. QQQ is a similar one. Let me redraw this a little bit easier. %90 of days will close. End of day, right here. So 90% of days under these conditions, when all these lights, this is what our software tells you. This is all statistics. All these lights are green. Clean. Clean, 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 clean. 90% of days will close above here end of day. This is fact. This is our stats. I always scalp from there to there. This is a trade I always will take. I long from there and I X out. Another trade is I long here to the halfway point between the two of those spots. So there's two little really high probability scalps I do take. 96% of days close below the upper DD band, 4% close outside. So it's 88% in between the bands, 8% below the lower band, 4% above the upper. So 96% of days will close inside of here. This is a pretty solid setup day. I don't chase outside of here. I don't chase a long. I don't chase a short. I'm gonna play this to here, there to there. Super simple. 96% in the day. Ooh. I figured, guys. Zoom call. Head over to YouTube really quick. Smash that like button. Give us some love over there in the YouTube world. YouTube stream growing like crazy. Baby. #1 day trader on YouTube. Oh, by far. By like not even close. Better than the next two put together. Like if you put two people and put their accounts together, and we all start at the same amount, and I would outpace the other two put together. Not gonna lie. Don't call me like cocky or anything. But results speak. This particular trading contest, Elite Trader Funding, I'm at like 84% win rate right now. The entirety of the month. Pretty common. I usually trade above 70. I'm very selective. I don't chase trades. I don't get I don't try to like get in at the end. I try to catch reversals. I always try to be first in a trade and plan very meticulously. I try to teach you guys how to do it here. What's up? Good morning. Yo, YouTube people. What's up? Good morning, Steve. Actually, good morning, Vin, Evcat, Jessica, Rich, Mike, Beavis. You know, so we have a Zoom call right now. We have a lot of folks in right now as well. Not just Zoom, not just YouTube. Quickie little flush on cues. Hit that bottom area. That's all we want to see. Things are still bullish. The problem is that the market's going to try to support right here. It may not dip to there. If it dips to there, this is going to be a good lucky trade for us, but it's going to still try to rally from here. I might miss out on the long trade, but we'll see. Come on, come on, come on. Boom, 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 boom. Oh, come on, come on. Let's hit that bull zone. Let's hit it. I did want to tap this short, but I'm going to wait for this to turn around. Gonna fight. It's not a down day today, but the problem is that it's too close to the end right here to take a long off of this. On this break, I usually sit out. I don't take that long outside of these green bands. I usually sit out of those. But this is not going to want to sell off that easily. All right. Just want to get these taps here and here. This is where I build a good long to scalp it right back up. That's anyone's game to kind of guess what happens from here. Personally, I'm going to want to bet to the bull side, but we'll see. It's kind of hard to say. All the signs are pointing up just like Friday, but then Friday ultimately ended up selling off, right? I hate boring setups like this. Any kind of problem and excursion could be a big sell-off, though. Typically, this is the end of the trading day, and a lot of times you reverse off of those bands too, but it's not often that you often take that bet that you do, because it's not common that you hit these upper bands and it reverses and sells off. A lot of times it just floats up here all day. So you wait, and then it grabs a dip, and I long it right back to the band. That's kind of like one of my favorite trades to do. I did it on Friday. Friday was the one time it didn't work, though, for me. There's that run. There's those cues. We're walking right up to my area that I want to trade at. Right at the bottom. There she is. Don't jump in early. Get the level I want. Everybody get to that little spot there. S&P following suit. Not worth getting in early on. Since it's not a big run, I need to get every penny I can, so I got to get these pivots on the dot. On the dot. Let's go. It's problem, like I said earlier today, I said on the stream, the problem with trading competitions is that when you get to the last week, the dynamics change. This is something you have to understand, even as a poker player, professional poker player. You have to understand there's some additional dynamics coming to the contest, not just trading well. If you look at trading stats, my trading stats are pretty solid. Like I have like an 84% win rate over the course of the month. I've only lost a couple trading days. My drawdown's been immaculate. Lucky me. Market's kind of gone in my favor. Most trades have been pretty much by the book, except for Friday, by the plan. Problem is, last week, you have people in the middle tier, and a contest typically does this. It just has nothing left to lose, and say, well, whatever, let's go all in. And a lot of times, because the difference between first place and 50th place is not far enough away, it can't be achieved by a single lucky YOLO. If the market crashes for one day, anybody short can jump 100 places on that leaderboard. We're close enough. So the idea is that because other people can trade harder like that, and because they allow a certain amount of contracts to be traded, so you can calculate the average daily range in the market, right? We know the DD band tells us that. Times the number of contracts, the amount you can make, you can actually, some of us who've been trading like, 2,000 to 4,000, whatever a day, there are people that have 15 to 20K days just by pushing the button, YOLOing it at the right time. And then so, like, if you're in the middle, you might say, yeah, I don't care. I'm just going to YOLO because what do I have to lose? And so the problem is because other people can do that, I am forced to also do that. So anybody in the leaderboard, unless you have a commanding lead that's outside of that range, it's close enough that I have to trade harder at the last week anyways. So you have to take the mentality of you either win, like, there's no 7th, 8th, I don't care. It's either first place or no place. So I got to trade it hard too. So while I can just coast in the finish line with great stats and be in the top 10 easily, to go for number one, I have to swing hard and hit a hard, grand slam just because other people, 50% of people can YOLO long or YOLO short and then pass you up. So what's neat is that a lot of times you'll see this dynamic in a lot of times these competitions when there's no risk on the table, is that somebody will just appear at first place out of nowhere. It's not like they were trading well the whole time. They may have just been trading mediocre, but then like that. So because they allow a larger contract size for this account, it's a $10,000 start. They let you trade up to four minis worth of contracts, 20 micros and 2 minis. That's enough to get 100% in a single day, 200% in a single day. So somebody that inching their way along with perfect stats can immediately just get run over. So because of that, competitors like myself have to actually intentionally trade harder than we normally would to maintain a lead. So what it does is it causes the probability of me falling out of second place to go even higher. Probability that I blow up is really high because I have to trade bigger or take bigger losses. So because that effect is there, I've been in enough trading contests to know it. You have to kind of watch because there are people that will be likely going all in. So big days that are like high probable days like this, high probability that we stay inside of these ranges, I'm going to hit it really hard as I can on each edge. And if it doesn't work out, my drawdown will be bigger than normal. So it's not like it's an intended trading pathway that I would normally be trading like that. Basically, because they will YOLO, it's going to force me to have to do the same. But not YOLOing, but I have to bet big. I can't just be like, well, let me just take one contract. My risk is medium. Like my normal risk management rules have to go out the window because of a trading contest. You guys, does everyone understand what I'm talking about? YouTube, does that make sense? Because you must, therefore you have to. There's a there was that thought experiment. Ever heard of Roko's basilisk, however you say it? Thought experiment, which states that a benevolent creation of AI will ultimately be in our future. We will create AI with emotions at some point. And therefore, emotions can be soured. And any kind of AI robot that becomes created will have infinite connection and history of humanity at its beck and call on the internet, right? And so an AI that becomes created that has, good intentions, but emotions, will look back in time and remember who helped bring it into existence to begin with and reward those people with wealth, with status, with whatever. But also we'll go back in time and reward and find out who fought against its incoming resistance. People are anti-AI, anti-this. And this creature that we create will actually punish you for not helping bring it into existence. It's a thought experiment, right? So what happens is, because it's ultimately going to happen, you must be on the side that brings it to existence, or else it might, I don't know, enslave you to build robots, or punish you, or lock you in prison or something. So the creature we create will punish you for not helping create it. So basically it says your hand is forced no matter what, because other people will do it and receive it, you must do it as well. So thought experiment is the same thing here. It's because other people will do it, I'm kind of forced to bring that same risk into existence as well. It's cool. It's a cool thought experiment, right? So don't be anti-AI, because the robots will punish you for not bringing them into existence down the road. So Christos, we teach a whole class on this. So there's so on my screen, you see there's a thing called liquidity map. There's a guideline on my screen. I use the Rocket Scooter platform, and I look for probability setups. These percentages you see on the chart are the probabilities that we close in between these ranges. These are actual stats from our back test. 96% of the time of days, we will close below this green line right here. 90% of days, we will close above this bottom right here. I usually trade from support to resistance every single time. And I use a philosophy of having a 1.5 to 1 trade if I can find it, or a 1-to-1 trade with the lower position size. So from here, I'm trading from here right back up to there with a 1 strike stop, or i.e. 10 points in S&P or 40 points in NASDAQ. So I'm longing from here right to there. Roughly speaking, that's about 100-point move in NASDAQ that I'm longing for. So I normally trade static accounts. They're harder to get, they're harder to make profit on right out the door, but they're easier to maintain the account as time goes by, because you don't have a drawdown. Now other accounts, and they're also cheap. They're quick to get in, quick to pass, I passed like 20 of them in like a 5-day period. So the idea is that static accounts don't have crazy amounts of drawdown, but they have a really tight limit. Like right out the door, you have to have a really solid trade. So your first trade has to be high probability. But they're all pretty good. The end of the day drawdown has a drawdown that trails you until you get to a certain level, and then it stops once you're funded. But in the eval side, it doesn't do that. So it's harder and longer to pass those evals. Yeah. But I've always loved static because they're but personally that's just me, because if you get one static passed and then you get 10, 20, 30K profit on top of the base, then you're basically trading a real account. But all let's call it ETF is all of their drawdown accounts become static accounts after like what, $100 of profit anyways, something like that. I think it's 100. So when the drawdown is frozen on the funded account, that's what you want. You don't want a trailing drawdown. You want a real trading account where it's like you trade it and 0 is your bust point, right? Yeah. Super tight stops. So I don't normally trade micro. What I actually do is I wait for a sale. I get a bunch of them, and then I just pass them very quickly. It has a high turnover rate. Like I'll fail a big amount of them, but I'll pass them in a day. Pretty much. One trade, I'll pass them. So it's a quick turnaround to get in to a bunch of them. And when they're not having a sale, because they become like $20 each when they have a sale, not a big deal. When there's not a sale, I'll usually trade the end-of-day drawdowns. And I have a longer period to beat those, but a little bit more of an investment on those. All right, so my trade's taken off on this one. Pretty good, pretty good. Longing right back up to the top. Hopefully we get that move. Resilience is greater than 0, so it looks like we're supporting from here to here. Res greater than 0, which is nice. Support here. is a gap fill predictor. So when this number is greater than 0, NASDAQ is likely to support there to there. 3 days left on the big ETF sale. Lock them in while you can. 1,500 on this one. Let's go. So today I'm gunning for trying to be first place in the competition. This is what I'm going for. So, right, if you've been paying attention to the competition, you guys. The static viewpoint, never heard. It's kind of like this. It's like you burn through. Imagine like if you have like real drawn on accounts, it's slower. You're going to spend a lot of time with them. The static is like get it and pass it, get it and pass it, get it and pass it. You're not fighting it for weeks. Trading NASDAQ futures, you'll pass the static in a single day, in a single trade actually. 2,000 bucks is not hard to get on NASDAQ futures by far to pass the 100K static. So imagine that you have like, you know, you're trying to get 20 of them really quick. I can literally get 20 static accounts in less than 5 days. So 20 funded accounts in 5 days. I just did it. I did it when they first had that sale. When they're cheap, it doesn't cost you much money. 20 bucks times 20 is only cost you like 400 bucks for 2 million in funded accounts. The problem is that they're harder to get off the ground. Your first trade has to be an awesome trade. You have to be really good at picking those trades out, which is why I do that. Not a lot of people can do what I do for that, and that's why it works for me. The high turnover rate, they fail a lot more often because that first trade is so sensitive. Normally you trade micros to get it off the ground. But you want to make sure that you don't hit that really tight drawdown. 625 bucks is very tight. It's like, no, there's nothing at all. Like that's the difference between here and here is blowing up your account. This little bit right there. Look at this. It's more than 625. Right? In Apex, I did the same thing, the statics. You just churn them and burn them. When they have a sale, you just brute force your way right up to funded. How much after you pass the eval? I think it's 80 bucks. So the total cost is $100 to get into a funded account. And if in one day you make 1,000 or 2,000 bucks on that trade, you get lucky and not blow it up, then you've made your money back times 10. It only cost you 100 bucks to get to funded. And then now you trade it for 10 days to get a payout. So therefore, you get your payout within the first month. It only costs you 100 bucks. Maybe you make a couple $1,000 if you're good. Keep your wins small so you don't pass the 23% rule. Don't go like for a $10,000 win. You're looking for a payout every month. So just go for base hits. If you manage to keep a quarter of those 10 accounts, and a quarter of those 10 accounts made 2 or 3 grand, you made 10 grand. It only cost you, you know, $1,000. 20 times 10, and then 80 times, or 20 times 20 is 400. 80 times 20 is, let's say it's $2,000 to take them all to funded. So 20 for the evals, 80 for the monthly. But when you go through our program, we teach you the risk management on how to pass all the different evals. That's kind of what we do at Rocket Scooter. We train people. Risk management. Market's still looking solid. My trade's trying to take off, which I'm happy about. Let's get this bad boy right back to the top. Let's go. Let's go. Let's go. Let's go. None of the signs are deteriorating just yet. But man, it's not picking up a lot of momentum here because the market does like to resist this upper band. It loves resisting. And all day we've been doing this trade, all night. I was watching the overnight charts and it was just nuts. Come on, get that support there. Come on. I got him right here at the bottom. Bull zone support. Love it. This is one of our favorite trades here. You see on this little cheat sheet right here, the bottom, the bull zone right here is one of my favorite trades. Such a high probability trade. Under these conditions, let me teach you. When all these lights are yellow and green, 90% of days we will close above this level. So I always long there. And so in our program that we have, our training program, you get the stats to go with that. I give you little cheat sheets and all the statistics. So my high probability setups I do, we actually, our members get access to it. We have about 300 people in a Zoom call right now who aren't in this YouTube. So we actually do a live trading stream on Zoom in the morning. So the YouTube is like 30-second delayed. The Zoom is in real time. So most of our community is over there. So we've got about 400 people watching the stream right now. I might touch bull zone bottom. Yeah, probably. I don't like that we're not getting a lot of momentum here. But I got to hold on. See, normally I would take some profit. But remember, we got to get first place in the leaderboard, so I got to push it harder. I can't wuss out on these trades. I can't take profit early. I got to take profit at the target. Let's get this guy green today. I'm only like 3K behind first place. And I started a week late. That's the problem. I started a week late. Full faith I can take Clip Clop. Oh, the first place person? Was that their name was Clip Clop? It is Clip Clop. They've had a pretty solid run. I'm not gonna lie. They're like me. Their run, they didn't YOLO to get on the leaderboard. Their account just goes up like that. So it's a worthy competitor in the space. Solid trader. Not gonna lie. Fairly impressed. Very rare that I'll say that, but I like seeing people on these leaderboards that don't just luck into it. Like, not making fun of you if this is you, but a lot of people here, there's some crazy, go to 36 to 20 to 25 to 37. So Top Trader 88's doing a lot of YOLOing. Went from 16 to 32, 100% gain, 150% loss. This is one of the people that YOLO to leaderboards. I love you to death if you're here, Top Trader, but your trading is like this person as well. This person hit it hard, went from 4 to 24 in 2 days. So a lot of these, like this person, solid the whole way up. So Van, solid. Escobar, solid. Lucky Rice, solid. Clip Clop, solid. Just basically like solid growth, right? So there's a lot of good competitors here. There's a lot of people also that got on very quick with some really lucky trades. So it's a mix, right? I'm actually loving the competition. There's a lot of really good competitors in there. So again, not making fun of you if that was one of your names on there. Definitely. But the nature of contests like this is somebody can just full port and make some cash. So I'm up pretty decent on this one, which is good. But yeah, so in the top 15, the top 20, there's 60% of them are pretty solid traders. I'm not going to lie. All right. Oh, wait, I'm at the halfway point. That's my spot. Profit. Let's go. Here to mid. I always take this trade. I'll take it every single day. Here to here. That is the BSU trade. That's a $4,000 lock and load, baby. Love it. Okay, so that trade setup is trade number 1 on BSU. Liquidity map gives you some letters. The cheat sheet shows up to the side. The open. So this is basically what this is telling you. If you open inside of all of this, open below this blue but above this bottom, which we did. You open in here. The bottom of the zone here trades to the halfway point between here and here. We actually teach this one, you guys, called Matt's favorite trade. When all those lights were green, which they weren't, 90% of the time that trade works. Believe it or not, we have some setups that are 90%. I took profit. I got in first. I got out first. Look at that. Boom. I had to hit it hard. This contest mechanics are silly. I don't know what else I can do today, though. I should hold it to upper DD band, but that scalp is really solid. If it falls even further, this scalp I take every single time as well. So ideally, what I'd like to see is for the market to flush pretty hard, hit this, and then bounce right back up. How'd I do? Okay, so this is all textbook rocket scooter stuff, super textbook. What's the relevance of the halfway point? So without going into the mechanics of what we actually do. So what hedge pressure is this is what we'll just reveal what it is we do here. So we take the options data feed in QQQ and translate it to actionable futures pivots in NASDAQ futures. Okay. In the options data feed for QQQ, we extract only valuable information from it. All the orders that come through, we throw away most of them, and we find ones that we believe belong to market makers. And we have a way of determining that. That's the algorithm we created. So dealer options can give you a lot more information because they're hedging their positions to neutral. And so we can predict where order flow will be from dealer options, meaning we can predict volume. So we take that and convert it to actionable NASDAQ pivots and actionable S&P pivots, and they have probabilities. 90% of days will close down below here. 96% of days, sorry. 90% of days will close between here and here. This push to there, that push to there. You have those high probability like that. They're both trades you can take. But you manage it manually, 100% manage it manually. And I'll talk about my stop loss philosophy in a second. So what, if you basically can see, like anytime you get closer or touch touch either one of these, you will see high volume. So what's neat about like our stuff is this predictable high volume. Let me show you. Oops. So we actually have a whole new paradigm in trading. It's not technical analysis. It's actually volume prediction. This is a maximum gamma level, maximum gamma exposure of sold market maker options to the underlying share dealers by the writers of these options. Now, it's a whole mouthful of stuff. Let me repeat. Market makers of options sell options to the market makers of the shares. The shares are balancing their books with futures and ETFs. They're mirroring each other. So these dealers will buy options. The sellers of those options have risk levels at these blue and at these orange lines. And so when you touch them, it is predictable high volume, 100% certainty. It's never wrong. Never wrong. That's the cool part. So we don't try to predict price action, but we predict volume. So I know where traders will be. You see this volume spike right here? Volume spiked up right when you touch that level. Right here. So because I know where traders will be, I have really rock solid pivots to trade from. And so 9:30 in the morning, we print these levels. And any stock, any ETF, any futures contract, any one of them has high probability trades. And then what the cheat sheet does is it draws where that flow path is based on the net sum of all the Greeks, basically. So, for example, with SPY, it's telling me from the open to the blue back to the open. There's a V-shaped move. Open, blue, open. So it's trying to hook right here, which is kind of that long I would have taken if I was in SPY. So my stop loss is 40 points maximum. So I never do any more than that. And I slide my stop loss tighter if the reward is less. So I aim for 1.1 to 1.5 to 1 trades. So slightly greater than 1 to 1 if I can. S&P, I'll try to get 15 to 20 points, or 11 to 20 points, sorry. It's somewhere in there. 15 would be average, but I try to get somewhere in there. NASDAQ, I try to get about 100 to 150 points on average. And NASDAQ, I'll try to stop 40 maximum, and then S&P 10 maximum. So equivalent of 1 strike distance of options. So one point in SPY is 10 points S&P. 1 point in QQQ is 40 points NASDAQ. And so I never, ever, 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 ever put a stop loss on my DOM. But I never, 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 never not have a stop loss in my head. And I'm never walking away from the computer. Now, I don't trade into events. The reason I don't use a stop loss is because I'm old school and paranoid about it. I don't like revealing my hand to know that the exchange doesn't know my stop loss, but my broker would, right? And so your broker might sell bulk data to the market makers. You never know. Again, I'm like, I don't reveal my hand. But if I have to walk away from my computer, I'll always put a stop loss on every time. But I manually know exactly where I'm going to stop. And I've been trading for almost 11 years now, and I have the discipline to push the button every time. So the reason I tell you guys you must use a stop loss every time is because you don't know as much as I do. Like I know market events, I get out of the way. I know that the market will stay within a certain range almost all the time, even when there's a huge like random tweet or something that tanks the market. The market doesn't just fall infinitely. The market will fall in stages. And so I usually get enough time to react before anything happens. It's very rarely going to walk up and the market just move 200 points, NASDAQ, or 500 points, S&P just on a whim. Markets are very structured, and so I kind of exploit that idea to use manual stops. I trust the market more often than I don't, to not just turn out of the way. And also problematic is like when you trigger a market stop, you're filled at the market. And so even though your stop was here and the market's tanking, you can get filled down here. That's the problem. You're basically filled at the mercy of the market maker in a stop loss. So you get less control. I'm walking a little more dangerously by manual stopping, but I get more control. The market dips very quick and pops up. I can just push the button and get out. A lot of times I can get out a little better than a physical stop. So those are two reasons you don't see it on here, but in my head, I always have a stop loss in mind. And it is meticulous. And we train you on that. And you guys, I tell you, put it on your DOM. Damn it. Use it. But for me, I'm just so old school like that. I come from a time when the markets didn't move around so quick. So I use manual stops. You know, back in the day when there were floor traders and pit traders, they don't have computers stopping them out. It's a luxury of the modern era. They just know where they need to dump their trade. So with 40 points on a stop loss on static, well, no, what you do is you throttle your position size based on that stop loss. So 40 points is the maximum that you go. So I mean, I go no more than that. So an example is every 10 points in NASDAQ is $2 per micro. Okay. So if you have let's just say a $625 loss, $2 per micro per point, right? It's $2. Every 10 is 20. So every 10 is 2 on a micro. So per point on 40. So 625 divided by 40. Right? Actually, sorry. 625 divided by 15.5. If it hits the blue line a second time you skip, I usually just lock in and trade from A to B. So let me do a quick little Google sheet and show you. A little bit easier. And maybe I'll share this with you at the end. You guys want me to... I'll post this in the Discord and share this with y'all. Okay. Make it really small. Just do the actual math here. Okay, so... you take the net lick of your account, which... essentially, this is the equation. Net lick divided by your stop amount to not blow up, right? So if an example is if our stop is 625, and so we'll say per micro and per mini, right? Per micro, every 10 points. For every point, it's 20 cents and $2, right? NASDAQ. per contract. Just do like this. The max down. For example, if you have 2 full contracts, so there's your drawdown. Yeah, 220, right? Okay. Hold on, let me watch this really quick. I'll come right back up on QQQ. Oops. So what you can find out is that for $625, and so you're making like $20 for every 10 points. It's $200 with 2 contracts. So the number of contracts, we'll put in a thing here. We're just going to start with like an example. If I were to do both contracts here. Say that you have like a 40-point stop loss times 2 contracts. Times isn't it 20 a point? 2 and 20. I'm sorry, 2 and 20. Yeah, yeah. I was like, that's why my math is weird. 2 and 20. I need to wake up here. Right, there we go. I was like, that wasn't making any sense. Okay, so 40 times there, times here. You can see that even for a 40-point stop loss, actually, let me put one more in here. Stop loss. If you do 40 points, right? With 2 minis, your loss is going to be here. Let me just put this on here. I want this to be there. Okay. Like this. So basically what you do is you can have like a less of a stop loss to not be inside of there, or the number of contracts will be throttled. So even at 40, the number of contracts that you want to do is less, right? So 0.5, 0.6, 0.7, 0.8. You can iterate, right, to find out where that 625 is. So roughly about 8 micros will be your maximum position to lose it in one trade. 4 micros would be 2. So right out the door, you want to do micros. The way you can calculate the distance is you're going to take your position size, calculate it. You take your drawdown, divided by your stop loss, divided by your profit per point. Stop loss in points. I'll share this with you guys on the Discord. Your position size for 1 1 trade blow up, or 2 trades. So basically for a static, you'll trade 4 micros, 8 micros and 4 micros, and then you have 1 trade and you blow up. If you want to say I'm going to give myself 2 trades, say either hit it and hit it, then you're at 4 micros. So you can start off with micros just like that, right? So remember, statics, you have to be really tight. They're slow to start, but etc. right, for 3. So, and then you scale your position up as you do better. So essentially, you can use this max drawdown. You can say like this, right? See, like day 1, and say that you made $1,000 for whatever reason, or say you made $1,000. So, and you can say like, let's do another thing, profit 0. Let's say day 2 you made or actually day 1 you made 1,000 profit. And so day 2 you have a bigger position size, right? So you're there. And then of course you're going to follow like the same rules here. You can see like as days go by, your position size can get bigger and bigger and bigger. Actually, let's divide by 10 to make this for mini. Oops. Oh, I do trade my personal accounts. So, like I said, I'm competing in the Robbins Cup, which is a personal account trading contest. I actually also trade options and options account, but I normally trade my... So right now I'm competing in this Elite Trader funding contest. That's why I'm streaming this. And I'm also working with him as well. I've been trading on YouTube for 8 years now. And I've always traded personal accounts. You guys have seen me have real accounts traded live since I was like one of the first YouTube streamers that there was in general. Before there were even micro futures to trade, I was trading futures. From a real account, I did real account challenges. I had one. There's one challenge I did one year where I took $6,700 to $95,000 slowly trading over the course of like 8 months, and I live streamed every day. And those of you that were here in YouTube or here on Zoom, don't let me say the number. Who was here for that challenge? Tell them in YouTube how many days I went on winning streak. Every day of those titles is in 2020, I think. Every day of those titles are like streak day 2, streak day 3, and the only one account, one trade was traded live. You guys remember? What was the streak? Yeah, 3 months. 75 days. And a real account. On a 75-day winning streak. 75 trading days, by the way. That was 3.5 months. Real account only. So why trade prop account right now? Because everyone else does it. Like, that's the thing. It's the most popular thing right now. And obviously, there's a lot of people that use it. There's a lot of people that have guidance. We created a trading platform. And our trading platform has a unique style that helps traders with risk management. And so, ideally, we want to reach more people with the trading platform. So not everybody out there is as fortunate enough to be, funding themselves in a funded account or their own personal account. Now, there are benefits to trading your own personal account, mostly tax reasons. The 60-40 rule is the reason to trade futures. And I still trade futures in my personal account, but I show the Elite Trader funding here on the screen. So whenever you think about the difference is that like there's more people that actually trade funded accounts now than ever before. And so ideally, you know, as a streamer, you want to be where the traders are. And so we teamed up with ETF. Very awesome company. I think they're great. I think they have great programs. I think they're actually a very honest company. Oh yeah, no. The question was in YouTube, by the way, not so everybody in Zoom was like answering the question. So these guys are. So this is $20 for 10, $2 per point, $20 for 10. So I do it this way so I can know that how many micros I want to trade. So for example, if your max DD or actually ID your account total, this is what you do. That's how you calculate that. So in a static account, just think of your account total as being the actual drawdown. Forget that it says 100,000 or 200,000 or whatever. If it's 625 to blow up, 625 is your account size, right? So in these statics, you just churn them and burn them. They're very easy to get in. They're very quick. And to get off the ground, you want to have one decent trade right out the door that's high probability. So like today, I took a high probability trade. I got in and got out, right? So that's what you saw today. I would wait until I got like a really clean setup and I'd hit it. But you would also throttle either your stop loss. You can trade both of them. What if you started out for the day and actually, oops, divided by this here. Let me delete this. I was just deleting. Okay. So as you see, like we've iterated or backed into the contract size that gives you the actual DD. So if it's 625 loss, a contract size for one trade is no more than 0.8 micros. And so if y'all want me to share this, let me know. I'll share this with you guys in our Discord. Go here. Go there. We have like an ask for help channel. We have a contest channel. Just go in there and send me a message and I'll share with you this position sizing calculator. I'll give this to you guys. Let's make this one static. So essentially, if you're using the amount of points that you want, that's the stop loss. You can also change this and it gives you a different position. So if you identify a trade, you say, well, I can only make 20 points. Let me make my stop loss 10. Boom. So then you can do up to 3 minis, right? For whatever the case may be, it's going to tell you the maximum position you take for 1 trade blow up, 2 trade blow up, 3 trade blow up. And you basically do the same thing. You're not going to try to like blow up on 1 trade every time. You want to give yourself, based on your win rate, how many days you want to go. So if you win 60% of the time, imagine 3 days up, 2 days down, right? So if you lose 2 days in a row, because that's normally what you do, double that number and make it 4. And this is how you calculate how many days you should lose. What is your win rate? Okay. Mine is, I'm going to put for this contest, I'm going to not make up a number. This is 80%. Okay. So when you do this, expected. This is a cool thing. You get YouTube. Do you guys like that I'm doing this and I'm putting together? I'm showing you guys how like I do my back end work. Is this helpful? Expected win streak on a 5-day basis, on a week basis. All right. Expected loss streak, right? Okay. So these two right here is on a 5-day basis, right? Loss streak, win streak. So what you do is, imagine you're gonna have like your worst streak ever. If you're 80%, you're gonna win 1 and lose 4. So what we'll do is we'll do double the loss streak, triple loss. Now you decide whatever is useful to you. I usually double. Okay. So to calculate the number of days you want to do it, I'll use my double loss as an example. Like if I go on a 1-day losing streak, okay, let's say that your win rate is 50%. Then you're expected to lose 2.5 days of 5 out of 2.5 days of 5 you win. So doubling that means you're going to lose 5 days in a row. So to make sure that you don't blow up over 5 days instead of just a 1 trade blow up, how many trades do you allow for that same risk for like your actual win rate? So you use your actual win rate because you know what that is. You'll do the same math, right? It'll tell you your stop loss per day. Okay. Essentially pretty simple from here. Take this divided by this divided by did I do that right? Hold on. Oh, I'm sorry. Stop loss is 10 points times divided by the number of. Wait a minute. My math is bad on this. Okay, wait. Stop loss per day calculated. So you take the total loss that you have here divided by the number of days. Let's just pick the double. It's how much you're going to lose per day divided by the dollar per point. Now you can calculate your stop loss per day on your basis on a double loss score. So let's do double loss. So at the position size, so here it's saying if I lost $6.20 or 6.25 points a day on a 5-day streak. Let me share this sheet. The market's painful to watch, or I'm painful to watch. Probably a little bit of both. Usually this spreadsheet is how I calculate my max position size. Just remember, if that's what you do, market's kind of blah. Contract. Yeah, 1 trade per day. So the stop loss per day per contract is $6.25 per contract. So essentially, or 6.25 points. So essentially, like right out the door, you can either calculate your stop loss per day on a losing streak per contract. And if you want to say, I want a, like, what your intended stop of 40 points, example. So I change these parameters here, right? Actually, based on losing streaks, so it's like a whole separate thing here. Question is, do I want to short the DD bands resist? And I never usually take that short. That's the problem. Simon made 164 a couple of micros. What's up, baby? Let's go. This market's blah. I got my one good long trade and I cut it, so I'm good. I'm pretty happy where I am, but we'll see what we get going forward. Get real-time data on the app. You need to click at the top right where it says delayed data. Click on that and it'll take you to the checkout for the real-time data. Go over, go over to YouTube and I'll walk you through it. Yeah, I do. It was like just screaming long today. How about showing silver at MHP? Any MHP is like always a reversal trade. I always take a reversal stance at MHP. Always. I always take a reversal scalp every time. I get real-time data. So you'll see, do you see right here where it says delayed data 15 minutes where I'm circling my mouse? Mine doesn't. Because I have real-time. Go here, click this button, and it'll take you to the checkout for real-time data. Omar. I got you. Okay, so if you take your total loss you can have divided by the number of days you're expected to lose, you're going to end up with profit per day or loss per day. Divided by your intended stop loss. Not a dollar amount. Normal number. Why not make it a dollar? Make it automatic. Oh, here we go, plain text. Still watching this paint dry market today. So this is your total loss divided by the number of days. Is going to give you, say, we did 2.5 days. Max position size. What this basically saying is that if you took one trade a day, of that position size times, actually we'll do divide by 10, so we'll do micros. doing this right? Hold on. So okay, so what this is saying is that if I took like the amount that I'm gonna lose, so day one I can lose 625 divided by the expected loss streak I have on an actual win rate. So you type in your win rate, it'll tell you what your loss streak is, and then we double the loss streak just to kind of be more conservative and put the right one in there. So if I lose 5 days in a row, I can only lose $125 a day. So if I divide that $125 divided by my stop loss times the amount per point, it'll tell you the maximum amount of micros or minis, maximum position size mini per streak. So as you see, for this one, if I want to blow up in one day, if you just make up a number like, okay, I'm gonna go for 2 days, and you can actually calculate it's like 8 micros, 4 micros, etc. on a static. But if you want to say I have a win rate of 50% and I'm going to lose 2.5 days in a row and make 2.5 days, and I'm going to double that number to be conservative. And the max position size I take for my stop loss I set is like 2 micros barely. Now I'm actually trading an 80% win rate. It's going to afford me about 4 micros out the door, assuming I'd lose conservatively 2 days in a row. And then I'll bust in 2 days. Because that's basically double my loss. So doubling your loss is being more conservative on your streak. So if you're like 60%, 50%, whatever, that'll tell you what you actually expect with your own performance. So this is your max position size. Say that my first day I actually made $1,000, and now my second day I have 1625. I can actually increase my position to 1 mini. So as the days go by, you just use this calculator to just calculate your position size. That's it. No, I have one of these, but I built it live so you guys can watch the stream. And figure out how to do it yourself. Or I can share it to you guys. If you send me a message in Discord, I'll just share this with you. So max position size per streak, if you took 1 trade a day, assuming you lose double, you'll be very conservative. You're normal. There you go. Which means like if your streak is like 3 days or 4 days or 2 days, your average, and you double it to be like, okay, it's very average probability that I'll lose 3 or 4 days in a row, whatever. And then you say, let me double it and make it 6. What's my maximum position size in case I have the worst of the worst week to really lower your chances of busting? So that's kind of the point of this, right? There you go. That's how that works. So as your account size grows, you'll be able to like go in there and say, oh, what if I made 2,000 that day? And then you can just essentially keep calculating this as much as you want. Oh, the position size is now 2. And mine is 1,300. Okay, the position size is 1.45, and I can say I made 6,000. Okay, my position size is now 5, right? So that's actually maintaining. All you're doing is throttling your position size based on your account growing such that your streak doesn't blow you up and get you have like a really bad week. That's why we set it on a 5-day basis. And this is my little secret on how I maintain my position size. And I actually do this in my real account. I just make my max drawdown a number I'm comfortable with. A $100,000 account, per trade, I usually like to go about $1,000. So total, I like to lose about $5,000 in a week per 100,000 at most. If I can. 5%. On average. For these kind of accounts. On my real accounts, I'm a little riskier. I like to take up to 10 to 12% a day. So that's a little different. I trade a little more aggressively in my real accounts. I'll let a 10K account make 2,000, lose 2,000. And what I normally do is I'll trade whatever account size I have. By the end of the month, whatever I end up making, I'll just pocket and I'll start over. So a lot of my friends do this as well. They'll start with like 10K and they'll make 5K by the end of the month. They'll pocket it. They have 10K, they make 10K, they pocket it. They have 10K, they lose 4K. Okay. Then they keep trading and trading and trading it to get back to 10K. If they go to zero, they just replenish the account from the money they had. If they fall below 10K, they just trade back up to it and don't take any money out until, again, they're above their starting point by the end of the next month. So it's a really good trick. So, all right. So we're looking for, again, I'm not shorting this. I'm liking I did a pretty good trade already out the door. I'm not going to risk it too much. A little tool here. Watching paint dry is fun. How'd I do so far? This is a pretty textbook day, so I'll revisit what it is that we did. Oh, baby. Woo! Woo! Right to there. This is trade 1. BSU. Got in here. I got to here. I exited. And chase this. Not gonna do it. %96 of days will close below this green line right here. Their ideal conditions, 90% of days will close above this level here. As an added bonus, I always trade from here to here every single time. I will execute this trade every time. If it happens to dip and fall, I'll long from here to here. As an added bonus, resilience is a pivot here. This number is greater than 0, so you have support. Pivots both ways. So any dip down in the bottom of this box is going to want to push back to the top of this box because the resilience is good. So it's low probability this market's going to sell off today. Strong position here. Stocks are all rallying. It's all good. What I like to do is let the market fall inside of a good bull market and grab those waves every time. So this was a long to there. This is a long to there. Yeah. So I'm not chasing for a breakout rally because we're probably going to close down inside of there. All right, 11 o'clock. We have market moving right now. On any kind of news event today? Nothing. Tomorrow we have CB consumer confidence numbers, always a big mover. Jolts tomorrow, always a big mover. Ooh, tomorrow's gonna be a big day. So use my code Elite Trader Funding. Everything is 85% off right now. Go stock up on as many of those accounts as you can. Well, that sale is going on for 3 more days. 3 days left on the sale. I get 85% off this week. If you guys check out our training program and you want to get access to our software and tools, it's pretty cool. We have a 1-month trial and 3 days money back if you don't like it. There are 6,000 people in our community, tons and tons and tons of traders going through our program right now. We teach everything we know in 20 days. It's 20 days worth of classes, about an hour each class. By the end of 20 days, you'll learn all these techniques and you'll learn all the risk management styles and tools. Do I want to buy this dip? I always err to the bull side when markets are strongly bullish. I never try to sell off a bull market. But I like bull markets to sell off when I'm sitting on the sidelines, which is what I like to do. So I don't like getting caught off guard buying at the wrong spot. I love watching bull markets sell off, and I love finding dips in the middle of the frenzy. You guys teach you something about half cap really quick. So anytime futures gap up, halfway point is always your support you look for. 20,500 on the dot for futures. I always look for this to test. Always look for that, which is about, it's for the S&P, it's similar area. What the heck? Come on. This is the trick. Just learn this trick from me. Take the close of the Globex here, and you take the open of the futures here, and that midpoint is always seen as a pivot. Halfway point. A very bullish market will not fill this gap. A very bullish market will hit this red line and bounce, which kind of coordinates really closely. 20 points lower in the S&P, and this is roughly what? 50 points in the S&P on NASDAQ. So 50 points on QQQ is about one strike distance from here. So that's roughly about here. So if Qs run inside of there, it matches the support I want to buy it anyways. So this little area is a buy signal for me today. What's up, Adrian? You like to see the price go back to the close of the previous day? Yeah, when a gap is open. The close of the previous day or even the halfway point. If you fill that gap, it's usually more bearish than not. If it's strongly bullish, as Adrian has said, we look for it to try to like complete that picture. But the halfway point is typically a bounce signal if it is bullish. So my entry, I usually start timing my entry right about that halfway point. So I drew it on there. Monthly maps today. Yeah, let's forecast 3 months into the future. Let's see what we got. SPY or QQQ sturdy with some selling after earnings leading into the election. So there's another bear wave that's sitting here. So likely that we do hit some selling pressure in a week from now. We can see it coming. The S&P sturdy like a rock, and bears are squeezing. So the S&P is really strong. Bull side flat to down. Bear side pretty much down. So shorts are squeezing still. You're going to get that poppy sort of melt up kind of feel to the market. Really good. It's really good for the bull case. Remember I said last week we're going to get big ups this weekend. And Friday sell-off was weird. Caught a lot of people off guard. I ended up over trading. I made 4,000, gave it all back. I made like $200 for the day, something like that. But today's a whole new day. So today's setup very cleanly. I'm going to long from here back to there. I'm going to hold a runner. Gotta take profit. Hold runner on support to there if res is greater than 0. Scalp it right back up. So what we teach you guys to do is how to draw on your charts like this. Wait for the trade I want. This is weak enough such that it's very possible I do get that flush trade, which is what I want. And I bet it right back up. So we'll see if we get it. Be right back. I'm going to go to a quick break. Some water. All right, we're back. What's up, y'all? All right. So we got the 2-year and the 5-year on deck in about 18 minutes coming up. That's usually going to stimulate a little bit of move in this market. I like to see a really nasty flush to catch that dip on again. I'll trade that dip all day long. 1.5 years stick along and head Trisha open, be done for the day. Oh God, what a long ass day today, right? Ten-year and 2-year are both used in a ratio. The people look at the yield differences to look for the supply and demand. The 2-year versus the 10. The 10-year is important because it's a typical long-term or short-term debt cycle. The length of a recession usually at maximum lasts 10 years, minimum lasts 2 years. So the yield curve between a short-term market correction or a couple-year recession versus the 10-year depression is why the 2-year and 10-year are very important. Because people that are going to look for fixed income returns, betting that the U.S. government doesn't go bankrupt, will likely be planting their money in the 10-year fixed income instrument to get some returns over the course of a Great Depression, but also pumping their money into the 2-year just to ward off a 1 to 2 year recession, which is kind of normal too. So when you see that the yield on the 2-year, yields go up when demand goes down. The premiums go up, the yields go down. So basically, more people buy the bond, it pays less, it pays out less. When the 2-year yields drop below the 10-year, then the demand for the 2-year is outpacing the demand for the 10-year. Typically, fixed income likes to get the longer-term steady market. Will hold through the up and down 2 or 3 years. But when people are like piling in to the 2-year notes very quickly relative to getting into the longer term, people believe that there's more reason to escape equities in a shorter term period. It tends to hint the market's going to hit some choppy waters very near term. That's why the 2-year auction is very important. It's coming up in 10 minutes, 7 minutes. Nope. Hold on. Wait, don't listen to me. 16 minutes. We're at 11:30 on the dot. As Garrett is reminding us to the 2 years on deck, baby. Don't forget to hit that like button, everybody in the stream here. It's the #1 stream, baby. This is the #1 stream on YouTube. You can't. We teach you position sizing today. We give you the solid gold strategy on how to manage your position, how to not blow up. Position management is the secret. It's a trick. I love watching paint dry. Come on, Zoom now? No, Rob. We just do Zoom for the first hour in the morning just to get the initial market launch going. Then after the first hour, we all pile into YouTube for the rest of the morning. I was kind of sick last week. I had like this weird flu, man. Not flu, but like it's mild flu. iDoc had a crazy flu, and she kind of passed a little bit on to me. So I haven't worked out. I need to feel like at the gym. I had a pretty rough weekend. Halloween parties back to back to back. Just Saturday night, I went to 3 parties. One was in this house in Houston called the Darth Vader Mansion. It's crazy. It's a crazy house. Let me show you this. Hold on. It's actually cool looking. It's like this iconic residence. If you guys see the picture here. That's what the house looks like on the outside. They call it the Darth Vader house. And it's selling for like $4 million. The inside is crazy cool looking. It's kind of old. It has like a 1980s look to it. It's exactly 100% not livable, but it is a killer party mansion. If you want to have yourself like parties, that's what they did. They hosted a huge party. I mean, like, where are you going to put your TV in here? You're just going to sit in this little pit. But as far as a party goes, it's pretty neat. So it looks like this in the front, and in the back, it's like, it's swimming pool, decks. There was a DJ here. It's kind of neat. The party was fun. We went to this. I'm trying to see if I can find pictures. I don't think iDog posted them, but yeah, it's pretty fun. I mean, the party was okay. It wasn't like, it's fun to see the mansion. And after that, we went to so the mansion was kind of interesting. It was like they're still showing that house. They're trying to find a buyer. I think somebody's trying to buy it, but there were some pretty prominent people there. Like, if you guys remember the HBO, the show The House of Hove, you guys remember that show? So like Washington Ho was there. Johnny Dang was there, the famous jeweler that makes the grills for everybody. He sells hip hop jewelry for everyone. It's kind of interesting to run into those people there. iDoc actually knows them, so she's friends with their whole family. So we talked to them for a little bit, but then we bounced because it was just like the party picked up later in the evening. We had like 3 places to go. We went to some home audio store for this other private event, and it was decked out. I have these photos I got to show, but they had the Halloween decorations that were so crazy. And then afterwards, we went to this club, and the funny thing was that we were dressed like, remember my last costume? She was Barbie and I was Oppenheimer, and I didn't feel like dressing up in my Oppenheimer thing again. So what I ended up doing was like, I called it low key Ken. I had this costume, which is basically, I just wore like shorts, like basically like, 5-inch inseam. So like short shorts. I always like looking uber preppy. I wore my tennis shoes, and then I had a sweater on that had a ghost, and it said like, "This is some boo sheet." And it was like BOO. It was cute. It was a ghost. Ghost had sunglasses. I had sunglasses, So I had like a sweater and some shorts. And then my friends were like, "Hey, we're going to this club." Really upscale club. It is a jacket and button-up shirt only kind of place. But I'm like, I don't know if I can get in because I'm like low-key Ken, and I got low-key Barbie here. And I I mean, I know the owners and stuff, but we showed up. The doorman didn't know me. They didn't know I knew the owners or whatever. But it's like I don't want to go to the fancier club in shorts and tennis shoes and like have people say like, you know, there's a line of people trying to get in and we walk up to the front and they're like, oh yeah, you know, come on in. And everyone else is like, hey, that guy's got shorts on. Yeah, I don't like to disrespect the establishment that way. They showed up and I was like, maybe it's Halloween, maybe they'll be leaning on the dress code. And then, you know, the bouncer guy was like, hey, hold up. Button-up shirts only, my friend, and you can't wear shorts and tennis shoes. And I was like, oh, so I was like, this is my Halloween costume. Is there a buy tonight? Because I just didn't want to drive home and change. Because I would have driven home and change anyways if I needed to. He's like, no, man. He's like, you know the dress code's here, you know. And I was like, no, I come here all the time. We get tables all the time here. And he's like, yeah. Well, we can't let you in, bud. I was like, oh, okay. So I'll just go home and change real quick. He's like, yeah, go ahead and change. Come back in. And well, on my way out, one of my friends was like, hey, one of the owners were there that we knew. And he was like, no, Matt's cool. Let him in. So I kind of like snuck in because, you know, there's a big line of people waiting to get in. And we don't usually wait in line over here, this place. And the owner's like, yeah, come in. But like I had to kind of like sneak in because I didn't want people that were getting bounced to see me with like privilege. I mean, I hate feeling like that. Like I always try to sneak in. I don't like people like saying, oh yeah, he can get in without having to wait in line. Like, who's this guy? How come he can get in with shorts on? Like I still want to keep the, you know, establishment dress code up. So the whole time I was in there, I was kind of like hiding off to the side because I didn't want to, or trying to get in. I was hiding off to the side because I don't want people at the front that were waiting in line to be like mad. And then they go on social media and would like post like, hey, you know, so-and-so was breaking the dress code. But so I was low-key Ken with my shorts and tennis shoes at this bougie upscale club. I'm probably the only person in the history of that club to ever walk in with tennis shoes on. But we had a good time. Super awesome time. Halloween. Waiting for this damn move. We got 7 minutes till the 2-year auction. But, and after that, my friend had a house party down the block. So we were out till like 4 in the morning. I don't normally go that hard, but it's Halloween. Everybody's going crazy. Sing along, snap and V. Let's do it, baby. That's what I'm waiting for. I'm waiting for that dip. So since we're trading kind of in the middle, this balance point is usually this like middle spot right here. I don't like to personally bet from the middle. I like to let the market move on an event and then react to it. Probabilities are pretty high. We close in here. So what I do is I like to wait for the market to quickly run and I tap it to get back in. That's a good setup. So if you guys wait for the setups you want, usually it's a lot better if you can plan it out than wait. So that's what I'm going to do. I'm 100% going to wait. I don't usually like to gamble from the middle and bet on spontaneous breakouts. I like to let the market try to move one way or the other, and then I get on the other side. Remember, guys, use my Elite Trader Funding code. You get $20 static Elite accounts right now for the next 3 days. $20 for 100K evals. You can literally pass them in 1 day. And they make you trade for 5 days, so just pass them and then one tap them for the other 4, and you can get, for $400, get yourself 20 funded accounts. Oh, then another 1,600 to, so $80 to turn it into funded. So $100 total journey to go from eval to funded. $100. That's it. $20 for the account. $80 to activate. Impact not being connected. Oh, right here. Oh, looks like the scanner was disconnected. Yeah, this is something we need to really work on. There's a little bit of a connection issue to the scanner side. It doesn't, it just the scanner would be behind, that's it. And it's still connected, which is weird. I think it's like finicky connection and it registers as disconnected, yeah. Just a scanner. That's a scanner, that's the resilience feed, that's the live data feed, and that's the futures feed. Yeah, doesn't impact the data. The resilience one will. And mine was disconnected on resilience, by the way. So I need to see how my resilience is just kind of like, let me refresh. Here we go. If you guys want to go through our 20 days masterclass, we train you on everything we do in a 20-day period. And every day after 20, we cycle back around to day 1. We go 1 through 20, 1 through 20, 1 through 20 with examples, trade plans, how to do everything. We give you cheat sheets as part of it. Like the cheat sheets allow you to kind of see all the different possible setups. I just frame my risk management around it. Today's trade is going to be very easy to manage. If we flush out on this auction in a little bit, down in here, I'm positioning to pop right back in. I'm not holding for a breakout. We know that the probability is really small that it breaks out today. So in futures here, what I'm waiting for is a dip and a pop. SPY, same thing. Can I wait to upgrade them to funded as you want? Yeah, so basically, you're paying the monthly sub. Pass the eval, just pass it. Sign the paper, and then it just sits there until you're ready to activate it. And you're just going to pay the monthly fee on the eval. And then when you activate it, you pay the activation fee. So that's what I do, Andrew. I have all my evals. I don't activate all of them, so I'm ready to trade them. Easy as that. But yeah, use my code. If you guys click that link that's in the stream right here. Look, I'll even show it to you. Look at this. Look at this, guys. This is my code. Look at this. Look at these sales. 165 for 24. 205 for 30. Look at this. 150K. This is the one step 150K is very popular, and now it's normally 300, and now seeing it for 44 bucks. So the ones that I burned through, these guys are 20 bucks. The 100K statics, super cheap. And of course, the end of the day drawdowns, which are my favorite drawdown type accounts. 150K is just 100 bucks. It lets you 18 minis. You want to get 9,000 bucks without losing 3,300 per day, or max drawdown 4,500, but marked at the end of the day. It's not utilizing, they're slightly more expensive than your normal drawdown accounts, but they don't, like places like Apex and others, that your drawdown is counted from the high of your account. You're counted from the high of the day, previous day. So your end of the day, or sorry, the end of the day, the previous day. So it gives you a little more leniency. Like some funded accounts, if you go up this far and then you come down to here, your starting point. Actually, a lot of times you'll long a trade and you're up profit, and it pulls back to here. You haven't closed a trade, you haven't taken profit, but you still blow up the account because that drawdown trails you to some level really far behind. But at the end of the day, drawdown eliminates this effect because your end of the day was right here and your drawdown is set to there. So regardless of your open trades that you have, it's not counting that drawdown from your current active account size from your unrealized gain. It's counting from your end of the day previous day. So I like the end of the day drawdowns for that purpose. Now they do cost a little bit more for that exact reason. They are giving you a little bit of a benefit, but you're paying for that benefit, right? Yeah. Do I see a new competition? starts in 13 days. Ooh. November Elite Cup. From November 10th till November the 29th. An upcoming. Elite Trader Funding is doing a second contest. Okay. Okay. Let's enroll in it. I want you guys to all enroll into it. You can. Oh, it costs points to enter these things. Oh, ew. My drawing is, it's for both. The same trade plan applies to both, but that drawing, this is for QQQ. I'm just moving the chart to match. They want them to be. Yeah. There's competition. I'll enter the second one. Why the hell not? All right. Need a second trade here? I crushed the first one. Because remember, we mark these halfway points as support. I'd like to see this pull to here and support going higher. This not to fill, but support going higher. Just a quickie little dip. We've got those. Auction just came out. All right, let's see what the data says. Yields on the 2-year, 4.13. Previous was 3.5. So that's good to see that the 2-year yield is coming down. I don't have the 10-year, 2-year chart. But as the yields are coming down, it means the demand for the 2-year is less. It means people are more bullish to stock markets. Remember, people buy fixed income instruments because of their belief that the stock market may have some downside. So they go to like a more stable bet, which is the yields provided by the U.S. Treasury, by the government. As long as the government doesn't go bankrupt, they will pay you that fixed yield. It's usually smaller, 5% yield over 2 years. Yields go up when demand goes down to attract more people to them. So if the yields are going down, it means people are flooding into that thing. In a strong bull market, you expect the 2-year yields to go up. And that print was pretty good. I don't know what the 10-year yield is. Somebody might be able to tell me in chat. But when you see that the ratio of the two is going up disproportionately, as the 2-year yield is going down faster than the 10-year yield is going down, demands for those things are going up. People are flocking to the 2-year from the 10-year in relation. Your fixed income traders are piling into the 2-year note, and not as high demand for the 10-year note is a recession indicator. So I'm too lazy to go look up the yield ratio, but if somebody has that number based on the new print, let me know. 10-year is 4. Oh, thanks, Garrett. So we got a, what is it, 4.1 or 4.2? That yield, when that yield curve, when that ratio, when that curve inverts, like from or one of them, let me see if I can get the 10-year, 2-year yield. It's like a old school trader. Let me pull back to it. You guys some data. Here we go. I found a good one. I'll hit my longitude point over here. In periods of recession, you'll see the 10-year Treasury constant maturity minus the 2-year is really high in periods of recession. 2000, 2008, etc., 2020, etc. Now we're down here. Now it's, I don't know, this is of September. Now it's slightly going here, which is kind of slightly, it doesn't mean the market's going to crash, but you'll see that this is a common thing. When this ratio is above 0, or sorry, not this ratio, this 10-year minus 2 years above 0, then the 10-year yield is higher than the 2-year yield, which means the 10-year demand is less than the 2-year demand. The 2-year demand is high. It means short-term recession is in. It's unpopular, and you'll see big run-ups on this. Usually my guide on this is when it's above 1%. We're pretty much in the middle of a really nasty thing. And so, 2008, you're already there. And then the end of 2008 is when the market finally crashed. It's not like this is a crash indicator, but it's an early warning sign that a top may be in. And you still probably have a year worth of trading. It's not necessarily in a danger zone right now. And it's pretty common for this to be above 0. Over history, you don't really see it, even in strong bull markets like we had in, 2010 all the way till 2020, it was still way above 0. Right. So right here, we're in a very good state for this market. It's not like damning just yet. Not too scared of this. And I need a good R&R on this trade before I run in and tap it right here. I want to actually hit this. I actually hit the zone bottom before I touch it. Res is still slightly negative, so there's probably enough juice to get down one more leg. I want to see this guy push a little lower, but S&P is hitting its bull zone, and that's the first pivot we have. SPY is on its zone bottom. Wood. All right, friends, don't forget to sub to the channel. Head over to the Rock Scooter Discord if you haven't. Click this link. Join Discord. Come on, come on, come on, come on, come on, come on, come on. I'm gonna wait all day for it. Today is not breakout ups, right? You guys know the drill. Our tools, if you guys want to subscribe to them, feel free to check it out. Like our courses, like unlike any other, you'll learn some things in these courses that you never knew existed. The joke is that people say we hack the market. That's what they say. And so even our little videos are like we hack the market. But what we do is we're a team of engineers and we use math to play the odds of the market. Just like engineers count cars in Vegas. It's all stats. Bear zone to bull zone tap. If we drop to that bear zone is a 90% probable trade. That L to that X on my screen is 90% chance that trade works. 9 out of 10 times. It's the stat. It's not a made up number. And all of these lights are green and yellow. Ignore this one because we're removing blue hedge pressure break for now. So this is actually weekly hedge pressure break is flagged, but weekly hedge pressure is no longer part of these rules as of now. Give me a second, you guys. I'll be right back. Hey. Breakfast has been served, ladies and gentlemen. Oh, actually, I need to get a haircut today. Hold on. I've been talking about this for weeks. Oh, wait, they're closed on Mondays. That's right. Never mind. Yeah, so right now, hedge pressure breaks are no longer considered irrational market flags. How many water? So weekly hedge breaks are no longer irrational flags. So typically irrational flag throttles my risk tolerance, like my idea to like trade lower. We've removed weekly hedge pressure breaks. So if you break through the blue line, it flags this line. So SPY is broken through its own. But we're gonna change the lights here. That it's not gonna flag on hedge pressure break anymore. Just MHPs. We found that the probability of like bull zone balances and DD band taps doesn't matter if hedge pressure is broken or not. The probability is the same. So usually we use those irrational rules that you see as like an indicator that I'm gonna trade smaller. It doesn't affect my trading size anymore. More of a 50. Yeah, it's like a 60-40 under ideal conditions. It's like not really the. It's not, but it's not really just the probability. It's that we notice that when hedge breaks or hedge doesn't break, bull zone balances and all that are relatively similar. MHP break is a big deal. It'll change the probability of everything's holding. But hedge break really doesn't. So like, yeah. It's not strong enough to dethrone all the other things. Because if you look on the list, the priority list, it's actually ranked at the bottom, right? Our Discord. Go down here at the bottom of our... So you guys want to see our courses? I'll show you here. So our curriculum is here. Summary shows you the list. Like, hedge pressure is all the way at the bottom as far as like priority goes, and all these other things. MHP break is a really big deal. They used to say hedge break in general, but it's just MHP break. What we found is that your DD ratio, your resilience, even your bull zone bottoms are all of these parts are your liquidity pockets and all of that. Redistribution zone, all of that are ranking above hedge pressure. Blue one. Oh, here we go. Here's the move. Here's the move. Let's go. S&P's tapping that half cap. There's a little bit of juice on that one. Come on. Come on. Come on. All right. Q now cycles on bottom tap. Finally tapped it. Come on. This is your pressure on resilience, right? You see this number is negative. It predicts that the market's going to flux this way. So you see a little bit of movement like that. Pushes this way. Get upper pressure from here. Downward pressure from here. I normally always buy this bull zone bottom. I already made that trade. So now I'm just going to wait to see if we do get a very quick excursion. I'd love to see this flush really big. And I'm going to go balls to the wall right there if it does. Come on, baby. Waiting all morning for that trade. So my trade this morning was I bought the dip. I closed out right here. That's the expected spot. 497.25 is that little balance point I'm looking for. This is where the market wants to be, right here where my mouse is. So anything down in here is a great dip to long it right back up to that same spot. Ooh. Oh yeah, this strong market is not gonna sell off at all. Not gonna sell at all. At all. What I'm curious is who on Friday in this contest account YOLO longed at the end of the day Friday and woke up to hundreds of points. That's what I always think about in these contests, right? Always wonder about that. Wake up, freaking Sunday comes out, market opens, and then how many people just like YOLO coin flipped? Yeah. Daniel already took that trade. I'm waiting for it to flush on negative resilience just to get something like a little bit better. I already took that trade. I'm trying to look for it to actually... I'm looking for this to go to here. So I already took a trade. Now, while I normally would build a position here long, I'm noticing that resilience is negative, and it's going to... And we have this like futures gapped up. And when futures gap up, you always want to tell yourself, your brain is looking for the ideal support to be that halfway point on the gap up. So I calculated it here and here. It's just like how you do your triple B calculation, right? Here and here. A nice strong bull market will push here and support on this and not fill the gap. So what I'm expecting is this, while this is an ideal scalp to be in, I know that very often this does like to do that. So a better scalp is for me to get a position from here. I've already made that trade. I literally made that trade earlier. I want to be a little bit more smart, I guess, a little bit smarter.
I want to be more smart.
To let this try to flush and then take a long position that we don't fill the scalp, number one, and that we end up back in there. So today, while I normally will position from here back to here, this, bull zone, bottom to halfway point trade, Matt's favorite trade. Matt already took his favorite trade. So Matt's favorite trade is still here if resilience is greater than 0, which it's not. So I'm not taking it. I'm just kind of talking myself out of it. Okay. So about right there is your profit target, your TP. Bang, bang, BZB, baby. Yep. So Matt's favorite trade is from here to here. Always here to here. Always. Positive res will give me a little bit more bang for my buck. Negative res still tells me it's still going to try to push lower. Now I can make these like little mini scalps inside of here. I'm hoping that the negative pressure building up will like flush this very quickly, and then I'll scoop it right back up long, and then I'll hold till the end of the day. I'm going to hit hard. Because right now I'm trying to win the contest. I'm in second place. And unfortunately, contests like this, people YOLO their way to the first spot. So to avoid people lucking themselves ahead of me by just like, planting a couple contracts and then going to bet on it, I have to really be careful and pick the trade I want and then hit it hard. Like hit it as hard as I can to try to get ahead. So that's my setup today. Well, I might miss out on a nice little long scalp here, which I usually always take. I do want to see this thing try to sell, trap a bunch of bears, stop out a bunch of bulls, and then me, again, try to be the first bull in the party. I love to see it attempt for bear zone. And this also, because we already tapped DD band at the start of the day, which you guys know is usually my ending point of the day anyways.
I usually take those days pretty cautiously. Like if we hadn't touched DD band already pre-market, Lee, you would know I would just, or Daniel, I would have just longed to get in, held till we touch DD band. Usually the trade I like to take. Well, I can't recommend you go long. I can't recommend a trade for you guys, but I will take this trade almost every single time. But the mechanic of trying to win a contest, I need a bigger run for my risk. You'd rather sit flat today on a flat, choppy market that's going to go up 10 points, 40 points on NASDAQ, up or down, to wait for the market to flush very quickly and me be the first one in to try to get 150 points. You follow what I'm saying? That's what I'm waiting for. So my strategy right now is particularly to win a contest where people are full porting their accounts to luck into the leaderboards. So I also must full port a position. I need the most highest probability position to take. That bear zone to bull zone trade, I take every single time. It is one of the best trades that we have. Don't I take the overnight dynamic bounce on S&P? I do. Yeah. Absolutely. But even here, I want bull zone. I want bear zone. I want to flush to bear zone to bull zone if we get it. Remember, my take profit is just right here. That's it. There's not a lot of room to really make that move. That's why I needed to flush to get R&R on this. Since I'm hitting the trade with 4 contracts, I need R&R that's going to be good. Even though it's probable that this goes to here, the R&R is really bad because my stop loss would be there, right? I'm not taking a trade. And here, it's kind of like in the middle. It's like a 50-50 shot. So my stop loss being 1 strike distance, even if I long from here to there, the R&R is slightly greater than 1 to 1. It's 1.25 to 1. But I need to hit it with 4 contracts so I can make 3,000, 4,000 bucks. I need to get ahead in the leaderboard, secure a lead. So it's like you're the final 10 poker players of the global, World Cup of Poker, World Championships, and your last 10. You got to make a strategic decision on how you make your next big bet to get ahead. Because there are people that are climbing the leaderboard 10 or 15 grand a day with 2-4 contracts. It just means they're planting a contract and going to bed. That's not like legitimate risk management. So the idea is that when you're winning a contest, you have to play the game in front of you. The game in front of me is that other people are full porting. I too must, in the last week, secure my spot in the top 2 by also full porting a position, which you don't normally do in a real account. Full port is the max they let me do, but I need to hit it at the max R&R. The highest position size requires the highest confidence. So imagine what people will think if the market flushes from here, drops below bear zone, and that bear zone to bull zone trade I take every single time. I will get those 10 points, S&P, 40 points NASDAQ. Will be a $3,200 profit on the challenge account for 4 contracts. I already did it once today for 4,000 here to here. I'm gonna do it again from here to here. Now SPY is gonna be the first. I might get into it early because SPY is gonna be the first one to touch bear zone. So by proxy, let me show you guys SPY really quick. Right. So even on a similar token, SPY is kind of in that same little boat here. And we're going to proxy trade. So with S&P... So if you guys are like trying to read my mind here, what I'm trying to do, I'm playing like chess, right? While all these traders are playing checkers, I'm playing chess. I'm trying to get 2 or 3 moves ahead of them. How many people on the leaderboard today probably lucked out and made 20K on their 4 contracts because they longed at the end of the day Friday? When you're in the middle and don't care, you might just YOLO and be like, whatever, let's see what happens. And so there's a lot of people I calculated, right, that might have gone up $8,000 to $10,000 just by luck. So the distance between second place and third place is like 5 or less. So it's very easy that people that YOLO'd into a big trade like this got in or might have passed me up. So I can't go for base hits anymore. I got to go for high probability trades. And now we're sitting at my highest probability trade. I'm going to wait and take it and hit it hard. Better than watching a good movie. You're watching me play chess. I'm trying to get like 5 moves ahead of the other traders. I'd like to see people make mistakes here and try to short it as it's falling. And it might sell off for the day. But that X is a very high probability move. So I'm excited to try to take it. It also fills the gap on NASDAQ. Also hits that halfway point on the gap up on futures. I mean, everything kind of lines up where that L is. So SPY is likely to fill the gap first. It has a shorter run. Hit that bear zone first. It has a shorter run than NASDAQ. So I'll have NASDAQ on the screen. When I do tap it, it's going to be because SPY made its run. So you guys remember, anytime you enter a liquidity pocket, it likes to get out of the liquidity pocket. Right? Enter from bull zone. It does not like to stay in the middle. So there's a bull zone support here, and there's a bull zone support here. This would break my heart if it fell and kept falling. We'll stab it here at this bear zone bottom. Bear zone top right here. Come on, baby. Come on. Run it. Took a Celsius can, just filled it up with water because I don't have a cup. It's not like you're watching me slam a Celsius here. If I can just teach. Yeah, who is that? No idea who that is. Is that another trader? Naya, Anya? I can teach him how to trade on camera, that would be better. I'm not familiar with that name. Oh, from Queen's Gambit? I heard of that show. Oh, you know, as much as I love chess, I've never that show. Me too. It's a 90% chance with no irrationality that you close in the bull zone. So anytime you open in bull and dip to bear, I always trade it back to bull, because what typically happens is that even if the market were to collapse for the day, it usually tests that really strong support before it collapses. So because the market is trying to close up here, even if it fails to close up here at the end of the day, it almost always will try to accomplish that. So that trade is very high probability. I always like to be long at bull zone. I'd still like to see futures hit that half gap, which is about right here at the same spot anyways. Remember futures has gapped up. Halfway point between the gap up is always a good support also. Guys, don't forget, if you're using Elite Trader Funding, use my code 85% off. Click the link in the chat. All evals for the most part, 85% off. For like 3 more days. You got to stock up today. Go get them. All right. So that zone to zone trade is always high probability. Being long from here to here is also a good trade to be in. I already made that trade once. Let's go here really quick.
Hmm.
Boring, boring, boring market. Boring day. It's too bright. Down a little brighter. Down a little brighter. That's a little better. Yeah, I took a trade today from here to there. That's it. My normal trade from here to I take profit. So right now I'm waiting for the market to try to flush to take another trade. Yep. Just waiting for it to happen again. Boring market. I'm still very bullish this market though. I'm not gonna lie. What I want to see is this half gap achieved. And maybe it might not get achieved today. Maybe it'll get achieved tomorrow. But essentially, inside of here, this is support for the longer run. Today, I'd like to see some kind of a flush. The trade only goes right back up to there, though. 96% of days close below this green line. The balance point goes to right about here. So I made that scalp once. I can make that scalp again, but I'm going to let the market possibly get a better R&R on a trade like that by letting it flush first. If there's no volatility today, there's really no scare in this market. It's definitely a strong bull market. I just need to get a better position because I got to hit it hard for winning this challenge. I got to win this contest, baby. Ooh, don't forget, guys, everyone here, hit the like button on the stream. You guys forget to do that. I want to see like 100 likes today. How much do you guys like us? Probably not that much, but should at least just tap it once. Yo, work today? Oh, that sucks. Man, I'm gonna tell you. This contest has been kind of fun, but I want to tell you, if you ain't first, you're last. That's the rule I live by. Second place, not good enough. Not first, you're last. Ricky Bobby. How do I like the progress, momentum of RS? What do you mean? The momentum or progress of rockets here? Like how fast we're growing? Oh yeah, we're growing pretty quick. I'd love to grow quicker. Yeah, we're going pretty quick. Oh. No sign this market's selling off. No sign this market's breaking highs. This is sitting near the middle of the range. I need some bigger stretch to get a trade. I want to see somewhere down in here by the end of the day. This is going to be chopping all day long inside of here. I already made that scalp once. I need, for the risk I'm going to take, I'd like to get from here to there. So we'll see if we can get it. I'm trading Nasdaq futures. I don't trade QQQ, but I look at QQQ for evidence of pivots in futures. That's the difference. So similar, like there. I look at both sides of the coin. So Angry Chair, the way that our stuff works is that we use pivots and equity options to trade futures. That's all I use. This is a brand new technique, and the contests that I'm competing in, I'm only using our technique. So I have a futures chart, equities chart. I got them side by side. I'm looking at both of them for clues to buy trade futures on the right. More information, the better. That's it. Boring, 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 boring. Why are they buying here when they can buy cheaper? That's what I'm saying. That's exactly what I'm saying. Now the bot's going crazy. I don't know why. This stream element spot is finicky. All right. Like sometimes it doesn't work, and then sometimes it works too much. No idea why. So something with YouTube is not being triggered properly by this like it's not counting the active people or the triggers that easily. Like it usually after so many chat lines and times it'll like post the timer. But it seems to like not post at all, and then at some point it like posts like every minute. It's crazy. But will it fill the gap? I don't think it'll fill the gap because the market's too bullish, and a bull market will sustain that gap as being open. And so if it does fill the gap, then I'm back to like being puzzled about why this market's not rallying harder. But what I like to say is that if it's bullish, it's going to fight off filling that gap, and that's exactly what I'm looking for. That's like resilience isn't in like the best spot for a big run up. That's like part of the reason I'm not, because I want to hit this with a hard trade. Part of the reason I'm not is because I don't have that full confluence that I want. Because I'm trying to trade hard to outpace some of the people on the leaderboard. Trying to get first, damn it. I do from one or the other, but I'll tell you guys, I don't diddle in the middle. I know this is the middle. These little peak pops here is right near the middle. We don't do a lot of diddling over here. I like to trade it towards the middle and get out of the way, and then just find a second or third trade on it. Sure, a lot of people are sending heavy positions right now, upside down either way, both sides, which I'm glad I don't do. Like a lot of people long at the open, try to get in, try to buy the dip sitting upside down. A lot of people maybe shorted on these drops and probably upside down. I'm just waiting. So part of like successful trading is about waiting for the things that you want to see happen. So I'm just waiting to get something I want to see happen. Waiting to let it happen. All right, you guys. If I were to start my Black Friday sale early for Halloween, give you guys a glimpse of Black Friday, and I was to do a killer deal for a lifetime, would you guys be interested? Celebrate, you know, us probably winning this contest and our new partnership with ETF. It would be kind of cool if I did a killer lifetime deal for Black Friday. Well, we always do, but if I did my Black Friday early, like we did Halloween, and then we brought it back for Black Friday, of course, but like we do it now. Y'all like that? We gotta keep some kind of deals going. Some kind of discount. Come on, market. Come on, come down. Need to hit my levels. I hit my levels. Y'all like it? Lindsay. Yeah, we've gotten so many emails. So if you didn't get, send me a message in Discord. I'll walk you through it. If we had to migrate 6,000 accounts. So if we didn't get everybody, that's our bad. My bad on that one. So send me a message, Lindsay, in Discord, and I'll walk you through the steps. Thought we went through all of them. If we missed a couple of y'all, I'll give you information on how to migrate over. Gotcha. Oh, come on, market. Sad, boring, lame market. Not shorting this. It's not selling off. It's strong. It's bullish. I want to see it flirt some of these key levels I need support on. I'm back to being a really strong bull in this market. Does it fill that gap? Not. That's the question. Alright, guys, we don't diddle. Not in the middle. We diddle at the bottom. Top. Any gamers here playing new COD 6? I don't know if you guys are Call of Duty fans. That came out over the weekend. New Call of Duty is decent game. I never played any of the old ones, believe it or not. It's the first time I ever played a Call of Duty. I put about a couple hours into it over the weekend. Wasn't bad. Different. So I was an Apex player, Titanfall player, Counter-Strike player. Over, the years. I don't get a chance to play much stuff these days, but I still dabble on the weekends. Call of Duty's pretty decent. I don't know what the old ones are like, but my favorite pro team. The rosters are changing a lot. I was always a big fan of Abraleli. He's just untouchable in that game. Him or Timmy. I like both of those guys. So whatever teams each one of those guys are on, I usually follow. Albra's on a different team. He used to run with Hal and those guys a long time ago when I used to watch, and now I think he's running solo. Team is Timmy on these days. Timmy's good too. Still on. Maybe like 3 or 4 years ago in the dojo, that was his team. Yeah, it's like 3 or 4 years ago. Probably like in season 7, season 8, I was pretty active. Who are your favorite players, Ice Wilder? Who do you like to watch? Lately, I haven't been paying attention to who's hot and who's good these days. Come on, it's that bear zone, baby. Bear zone, baby. Bear zone. My favorite video game ever. Ooh, great question. So we gotta talk genres here because boy, I'm a huge like gamer and movie aficionado. Games. Oh God. You pick a genre, I can list top 10s. There are some games that like in my heart are like a masterpiece, like just a whole different, but they're also different from each other. Fire Beavers and Aurora. I'm a fan of 9 Impulse. Oh, nice. So yeah, these are new team names that I'm not following. So I haven't watched any of the tournaments in a while. I used to pop them on every once in a while. Favorite platformer? I'm a Metroidvania guy, so like Super Metroid by far is the top tier, or Link to the Past. Like those are like top tier. Castlevania Symphony of the Night are like my favorite games of all time as far as that genre goes. Super Metroid, Castlevania Symphony of the Night. I've played each one of those like, I don't know, 10 million times each. My favorite adventure game? Zelda, baby, hands down. My first conversation with iDoc is so hilarious because I was at this club and we had hookah, we had 2 tables, we're all drinking, we're all smoking, we're all chilling. And I was there with like 30 people. And my friends were like, what are you doing on your phone? Get back over here, hang out. I'm over on the phone, completely drunk out of my mind. And I'm just chatting with this new chick I met, talking about how many heart containers I've collected in Zelda. In the last Zelda game. She's like, oh, really? Ooh. So I'm like, how many heart containers do you have in Tears of the Kingdom? She's like, well, not that many. I only have like 9. How many do you have? I'm like, I have like 40. Yeah, Tears of the Kingdom, yeah. So Breath of the Wild's good, but Tears of the Kingdom was like Zelda's masterpiece. It's like, since Link to the Past, that is like the Zelda that has become like the benchmark for all future Zeldas. It alone is a masterpiece of a game. It's like Breath of the Wild again, but it's leagues different in like what they've achieved with the game. They set a new standard that they're gonna have a hard time breaking. Tears of the Kingdoms, it's gonna feel like playing Breath of the Wild all over again. However, it's got all new stuff that I'm not gonna tell you about it, but when you play it, the game is so vast. You think Breath of the Wild is vast. It's about 3 times as vast. It's just so big, it just feels like a whole new, yeah, it's like, okay. So, let's check the next ALGS in January in Japan. Hope we're top 10. I love watching ALGS and Apex. It's such a fun competitive game to watch. I'm going to buy at Bear Zone right near at Bear Zone Tap on NASDAQ when it gets there. So I'm waiting for baby. That thing. Construction seem wild. Yeah. That part is cool. Favorite RPGs? Like, you know, I'm a huge fan. I was always a huge fan of Final Fantasy 7, Final Fantasy 10, Final Fantasy 6, in that order. And they've all been kind of lame ever since then until the Final Fantasy 7 remake. The second one, called Rebirth, it became the new masterpiece of the series. It is as good as any game they've ever made. It's not like, you know how like Nirvana Nevermind album was like an album that just hits you and sticks with you and is there forever. Final Fantasy 7 was like that for like all of us millennial gamers. So it's hard to like ever top that. But the new thing they're doing with the series for this last game that came out, it's by far the best game they've made since 7. It's the second part of the remake. So it's the way they're building the game, the way they're utilizing the format. Super good. I liked Chrono Trigger, super old school gamer. Xenogears, that was a good one. I like Grand Theft Auto. Like, I was a huge fan. GTA 5, Fallout. I'm a big fan of the Fallout series. New Vegas, pretty much the best one. 76 Blows. Fallout 4 was great. Xenogears was like next level mindfuck for a PlayStation game. It was nuts. Chrono Trigger can't be touched. Best RPG of all time. Chrono Trigger. You got to play it if you never played it. It still is actually good to this day because those retro 8-bit games, 16-bit games are like coming back in style. It feels like a modern game when you play it. Fable. I did like all of Peter Molyneux's games. Fable was cool. I hated the load times in Fable, though. That was the one part I didn't like. Anytime you change a zone or change something else, there's huge, crazy load times. Other than that, I liked them. All the games he would make were pretty good. What's the name? I always forget. Lionhead Studios, I think was the name of the... Of all their games, I was a big fan of the black and white games. Those are really fun. They were very old school. One of like the better games of all time. If you guys ever played Outer Wilds, I'm a huge like sucker for telling everybody in your lifetime you must play the Outer Wilds game. It's in a league of its own as far as games go. If you've played Outer Wilds, don't spoil it for the people that haven't, but it you can't describe what it is other than tell people you have to play it. There's a handful of games like that I tell you just have to play it. I'm not gonna tell you anything about it. Trust me on that. Journey was one of those games. You just gotta play it. It's its own thing. Another really good platform I really liked was Ori and the Blind Forest, the first one. Super good. That kind of revamped the genre for me when that game came out. Total Annihilation, yeah. Hades, I'm a huge Hades fan. I used to speedrun a little Hades. I try to. I want to get that dip. I need that better spot before I take a trade here. Okay, what am I? Let me go. Probably big budget games. The best big budget games, I think, big budget adventure games. I know I said Zelda's my favorite. PC games that I think are untouchable as far as like just masterpiece level would be Red Dead 2. Red Dead 2 is probably, that and Zelda are probably the two best games that come out in the last 20 years. If you haven't played Red Dead 2, it's like, as far as like big budget, it's basically like if Grand Theft Auto was in the Old West, and it's that same kind of game. Instead of like stealing people's cars and, you know, you're basically stealing people's stagecoaches and blowing up trains and stuff. Riding horses. That game is great. It was just so well made. I don't know. It just would range today, Liz. Oh, well. Have you used Rocket Scooter yet? I always smile when I say this. My algorithm tells me that. Great storyline. Oh, dude, in Red Dead, the storyline is very cool. The storyline is super cool. The games like that's just so much to do. You just never run out of stuff. So the whole series, like GTA and Red Dead and all that, are kind of like similar games, right? And I'll tell you, as much as I loved Vice City and I loved GTA 5, I still think Red Dead Redemption, if you like that kind of game, is the part 2 is the best of all of those games put together. It's better than any GTA game, I think. But again, they're very similar. Assassin's Creed is great. The Witcher, Wild Hunt, Witcher 3, also masterpiece level. Witcher is hands down in that upper echelon of modern games. Witcher 3. Rockstar knows how to make a game. They do. They really make some solid games. I had some high hopes because like Witcher was so good that CD Projekt Red, I had super high hopes for Cyberpunk when it came out. I remember it had all those problems when it came out for a while. But then they revamped it and they came out with the new Cyberpunk DLC, and then the game is really good. Still not that, you know, blockbuster it should have been, but it's still a really great game if you played it. Liz? Yeah, I want to buy it till it dips down lower. So we have some odds and probabilities. If you ever use Rocket Scooter, some of these levels actually come with odds. So these are statistical, our probabilities that I use are actually backtest results. There is a 96% of days will close below this level right here. Under current conditions, 90% of days will hold this level here. So I just make that bet. Last of Us is a really good game. You know what I like about that game is that the TV show is literally the game. It to a T matches the game, the opening sequence, everything. It's like literally watching the cinematics of the game. And the episode with Nick Offerman, that episode, you know what? I'm not gonna say anything, but you know what episode I'm talking about. It was such a tearjerker. It was such a happy. It was such a good episode in the mix of the whole series. To throw that one in there. You know what I'm talking about? Yeah, you know the one I'm talking about. I love when shows do that, where they throw this like one-off episode to like really just kind of build the environment that you're in, and completely unexpected. By the way, if you like the shows out of games, like the Fallout show is surprisingly very good. I thought it was gonna be corny or just like a bit of fan service, while it does like a very significant level of fan service. If you're a Fallout fan or not even a Fallout fan, Fallout show is cool. I like it. Yeah, The Last of Us, like super emotional journey. Yeah. The Fallout series is cool, and like the funny thing is that like, you know, the unnamed antagonist, protagonist, whatever, is like the ghoul is like becomes who you're like rooting for or watching or for whatever. It's like, I think the intention was for that to be the main story arc, but it's like that's where all the fans are like loving that character. Fallout 2, oh yeah. I played every Fallout game that comes out. So like, of all the games that come out, when they do come out, I get super involved with them. I'm always playing Fallout. It's not like it's like my favorite game ever, but it's one of my favorites. It's just like a comfortable game. And it's just every Fallout I love just diving into and doing whatever. What other games? Let me go through my Steam library and see what I got. See what you guys... Tell me if y'all played some of these games. Like I said, if you've never played Outer Wilds, that's the game you have to play. I'll say it's a really weirdly designed puzzle, adventure, puzzle sort of game. Can't tell you much about it, but you have to play it. If you like stories and games that'll like just blow your mind, it's really challenging too. You gotta play Outer Wilds. I'll tell you a secret. When you figure out the game, it only takes, I don't know, 15 minutes to beat. But it might take you 6 months to figure out how to beat the game. That's all I'm gonna say. Waiting for the earnings. Why are many people not trading today? Cash, check out my screen really quick. Right here. Look, our algorithm is telling me 96% of days close in here, 90% of days close above here. So because it's a range day, I'm gonna trade just the extremes. So like Rocket Scooter is an algorithmic platform that has probabilities of certain things happening. We isolate and identify these. These are our backtest results, 90%. So I trade with like, and let me I trade with between like a 70 and 80% win rate on this particular contest I'm doing. I'm right about 85%. I have high probability setups that I take. This morning, I traded from here to there, and I called it a day. This is my win. I did that. So today, I'm waiting for the market to try to flush down in here. I'm going to trade it right back up into there. So because I know that it's range, this is pushing down, this is pushing up. I'm only trading on the edges to get back to the middle. And because here to the middle is like not that much run and I've already made that trade, I want the market to try to flush one side and then I'm going to reverse it back to the middle. Does that make sense? Am I still in the Robbins Cup? I am still in the Robbins Cup. I'm just not actively participating in the Robbins Cup until probably mid to late November. After this contest is over, I might jump back into it. It is very expensive to trade in that contest, by the way. And when I found out nobody was really trading in it, that I wanted to trade in it to compete against, I just kind of lost interest. It's a year-long contest. I was hoping to beat some of these gurus that call themselves #1 and stuff. I was going to walk in and clean house. Yeah, no problem, Cash. I got you, man. I was excited because you go on social media. There's all these really bad traders. I'm just going to say it. Horrible traders. I mean, they're not even like, okay, they're bad, but they have big followings. And I watch them. They have no strategy, no risk management, no anything. And they just hawk trader funding programs all day with no strategy. And a lot of them are like, I'm entering the Robbins Cup. I'm #1 trader. I'm the best on YouTube. I'm this. I'm like, listen, kids. There's not a single person on YouTube as good as me. Matter of fact, there's not any two people put together on YouTube that are as good as me in trading. Head to head, I will smoke anyone. I will smoke any two people combined. And I've said that for years, and no one's ever challenged me head to head. Not a person. I'm not the best trader in the world, but in the world of YouTube, I'll run circles around all these people. The problem is that Robbins Cup was when they all decided to step up and say they were going to compete, and then I got excited. I'm like, I'm going to go there and wipe the floor. And I made my way to the leaderboard. I was in the top 5. Then I found out little by little, all of them are like photoshopping their names into the leaderboard, and none of them really actually entered the contest. They just set it for clout, and I'm just like, well, I'm here competing alone. I came here to beat. I had a list of names, and I came here to beat each one of them, so I can say that I beat all of them. And they were all like, oh, we're gonna start later, and I'm already like, hey, I'm on the leaderboard within like the first 2 or 3 weeks. And then people got pretty quiet at that point about the Robbins Cup. And it's very expensive contest to trade in because you lose 25% for mini and 40% per micro on your commissions. That's how expensive they make it. They have 2 different API fees that you pay for. The CQG fee, and Robbins takes their own fee on top of it. So to like trade your account and lose 40% to the fees and then 20% to taxes, you're fighting all year to keep 40% of your gains. It's completely ridiculous to do that. To me, it was only worth it to do it to beat some of these #1 traders. I wanted to win just to walk in, and I was going to be classy about it. I was going to walk in, I was going to beat every single one of them. I was going to take the trophy and just be quiet about it. I wasn't even going to say, hey, I told you so. I just wanted them on their streams and their viewers to be like, oh, you lost to Matt, huh? Well, oh, darn. I was going to be classy. I was going to even be quiet. I wasn't even going to go out there and call anyone out and be like, oh, hey, you got your ass whooped. I was going to walk up, take the trophy, shake everyone's hand, and say good game and walk away. Not that I'm that way. I'm friends with everyone in the industry. But, COVID, let's just say COVID created a lot of trading gurus, okay? A lot of them are really bad. A lot of them want you to think they're really good, though. But in the contest world, when people say there's a contest, Elite Trader Funding was like, hey, we're having a contest, by the way. I know it's late, but, come join the next one. I'm like, wait, how long is the contest for? And they go, oh, well, it's the month of October, but you've already missed like 8 or 9 days. We're going to have one in November. You should probably do it. And I'm like, you mean everyone got a 10-day head start and there's still 20 days left? All right, I'll get it. I'm in. They were like, oh, okay. Yeah, you can still enter. I was like, okay, I'm going to enter 10 days behind everyone and still try to win. So we'll see. Remember, everybody here got like a 10-day head start. Started like 10 days into the month. I made it to the top 5. You don't know anyone else who got that high? Trades by Matt got that high, by the way. And Matt and I were both excited to go into the contest in a similar fashion. Matt was like, I'd love to see how well I perform against all the other people on YouTube. And I was like, yeah, me too. And Matt and I are like super tight. We're really close. We're buddies. And Matt and I the whole time are like, I wonder how everyone else is placing. And I don't know. Matt hit the leaderboard within a couple weeks too. And then he was riding flat. He had some bad luck in some of the trades. And he had the same realization I did. That the commissions weren't worth fighting for. Once we found out that the 8 or 9 people who were like, I'm entering the contest and going to win it, we were like, okay, I can't wait to see how we outplace them. And we found out that no one else entered, and we were basically the only 2 people that entered from the, God, there was like 10 or 11 of these live streaming YouTuber traders that were all like, I'm entering. And one by one, they were all like, oh yeah, I didn't really enter. No, I didn't. Oh, I was just pretending. Maybe I'll enter later. And then Matt and I were both like, so he withdrew from the contest, and I just was like, I'm gonna keep my account. If anyone else steps up and says they're trading, I'll jump back in and waste money to beat them, because that's what it is. The Robin's Cup is a complete waste of money and waste of time. To lose 60% of your trading games is ridiculous. So losing between 40 and 60% of your total gains on a real money account, nobody's gonna waste their time with that. But I'd willingly waste my time with that just to beat some people who were loud and bad. So maybe I'll come back to it. Like I said, maybe I'll walk in November and take it seriously and try to get as close as I can. I think Matt peaked at like 3rd or 4th place as well. He did pretty good. But like Matt's realization was, while he did very well and came back down and did well and came back down, he was floating and breaking even. When you break even, you're still hemorrhaging money because of the fees. So you have to not only break even, but you have to grow a significant amount just to make a little bit. And that's what we didn't like about it. And I've called Joel Robbins plenty of times about this and said, you want this contest to be a big deal. You gotta stop charging those fees. Nobody will do it. I'm gonna tell you, there's only a couple hundred people that enter that thing. It's not a massive contest. I can't imagine that many people. And like, you'll attract thousands and tens of thousands of people if you made it like discount broker commissions and didn't have this crazy fee on top of it. But he said they don't have any plans to change that. They did create a quarterly contest with GFF, which is like some kind of sister type partnership they have for that particular purpose, like a cheaper, lower barrier of entry contest. Is still the same thing. It's gonna be like high overhead to do it. I see you in chat. I don't name names. I try to stay cool with everybody. But in light of contests and people's claims, I always just say I've got an open challenge. I'll go head to head with anybody. I even told people before, to entice them to challenge it, I would put $10,000 of my own money in an account for them to trade against me. That's zero risk to them, and all risk to me, because I'm gonna lose $10,000, whether it's me or them or both. And still nobody's decided for fun to do it. So I don't know. A lot of people enter contests too, which is funny, under like random weird names, so that you don't see that they're losing. That way, if they don't make the top 10, then you would never know. So another trick that a lot of these gurus will do is just kind of funny. Is they'll have like, their name will be like Fluffy Bunny 204, and then when they win, they're like, oh, well, no, that was me. That was me. Like, I'm totally Fluffy Bunny. And then, but if they lost, you would have never known it was them was losing. See, I go in as Rocket Scooter Matt. There's no way you wouldn't know that's me the whole time. If I blow up, you'll know it from day one. So I don't enter contests under aliases either. I pick one account, one contest, one name, so you know it's me the whole time. I'm not the greatest trader in the world, but I'm a very selective trader, and I'm very good at managing drawdown when I put my nose to the grindstone. So contests are my bread and butter. Because there's a couple dynamics that I do to outplay other competitors. Like right now, knowing the limits at which 4 minis can get you on a 10K start in a paper account. There's no risk, so there's people going to be YOLOing it. So I'm thinking ahead. I got to hit the trade hard with a big position size to maintain a lead. So I've done a contest scenario. There's some dynamics that go with it. I can't just trade well with a high win rate and low drawdowns. I can't just trade well like this because there are going to be people that get on this leaderboard just by accident. Because the NASDAQ rolls a 200-point run, 4 contracts is 800 every 10. So 200 is a $16,000 gain. NASDAQ can run 200 points pretty easily on big run-up days. So imagine somebody going from, 500th place to like 12th place in a single trade just by lucking into a big run. And that's why contests are kind of hard to win every time. It's easy to do well and be in the top 20 or top 30 if you just are a good trader. But to win, you have to think that second step is, which day do I swing for the fence? And a lot of times when I get to the end of a contest, I have to say, okay, I'm in second place. Neck and neck is 5 or 6K away from me in third. And first place is like 3K ahead of me. That's the difference between first and 10th place on NASDAQ is a move like that size, this much. That's enough to switch people upwards of 10 places at full port. So the idea is to maintain a lead. I got to get a position where I can full port with high probability for the run so I can actually grow my lead significantly. Because there are going to be people in the last week that are in the middle and they're going to be like, oh, fuck it, whatever. I'll just go all in. Whatever, it's a paper account. So there's no risk. The probability of people YOLOing and going all in is high, right? So since I'm getting ahead of that, I know there's going to be people who Friday probably bought the dip at the close. And as of right now, we're up 10K. Me not doing anything at all could kick me down 5 or 10 points since spots on the leaderboard. So in the last, week of the contest, I have to be very careful where I trade, and I'm going to have to make some really solid high probability trades, and I got to swing hard at full port. So the reason I say I can beat all these people in trading contests, because as you see, the skill set is not just trading well. That'll get you close, but to win it is you have to get lucky to get a good hand. And like in poker tournaments, it's the same thing. Anybody who's amazing at poker will be in the top 50 players in the world. But the final table, even the final table is random. And the winner is random. It's like who gets the lucky hand and how you handle it. So what I'm looking for is a lucky hand or a good hand with a high confidence that I'm going to hit hard and go all in. So I have to basically try to gain a commanding lead so that nobody in the middle tier full ports and YOLOs ahead. And so in trading contests, it's not just trading well, it's actually taking the next step, doing things you don't normally do in a normal trading account. Because I know the risk, or at least the probability at which people can go up in the last 3 or 4 days, the market can vary to a degree right now that people can go up and down 30, 40K. Enough to start the contest today and even win it if you get lucky 3 days in a row. So I've been moderately trading at a moderate pace. And now I'm trying to swing hard. Just to get ahead. So I'm either going for first place or no place, basically. In Robin's Cup, it's the same philosophy. The problem is it's real money. So there's actual, you can't, it's not just like you blow up and you're like, whatever, I blew up. You can actually just lose your real money. So again, to get in the first place spot, you have to bet hard. Now, the best thing about Robin's with that is you get a whole year to just wait for those highest probability setups just to smash it. If you ain't first, you're last. And that's it. All right, this is kind of blah. I'm going to get off the stream, you guys. I love y'all. Come to the Discord. We'll finish our day up there. Nothing's happening right now, and I don't want to sit on the stream all day long. Don't forget to sub to the channel, you guys. Real money's with swing trading, not day trading. We have to be able to read the market better. Yeah. Robin's Cup is like not a day trade every day sort of thing. It's like wait for the high probability setup, hit it hard, make the money, wait again, hit it hard. Day trading every day with Robin's with those crazy fees will just eat you alive, as Matt demonstrated. You day trade that every day, every day, every day. Even if you win half and lose half, you're tanking. Your account is tanking because of the commissions, the fees. So the Robins, you just have to wait a week or two, get your high probability set up, hit it hard, wait again, hit it hard. And so it's more like it's day trading, but you're taking it little by little. All right, I'll see you later. Adios. Don't forget, we are doing a Black Friday thing. We might have that same special for Halloween. So what our Black Friday special is, we'll do early access for lifetime. If you're interested in that, it's a huge discount. We're going to do it just for this week alone. I'll be posting up information in our Discord about that. Just buying the software outright. No monthly payments or anything. It is our most popular option. If you guys like the Rocksuiter platform, all the stats, all the odds, all the backtest stuff that goes with it, the cheat sheets, the flashcards, the training, 20 days webinar that teaches you everything we know in 20 days. How to trade with probabilities and throttle your risk. Somebody asked me in YouTube today, how did you know today was going to range? That's kind of cool. Well, I'm winking at you when I say this. We have something special. I invite you to check it off. Our monthly subscription to the platform and the training is 50% off first month for a trial. Check it out. 3 days, money back. If you don't like it, just ask for a refund. But in the history of us being a company, nobody's ever asked for a refund once in those 3 days. I should tell you something. I think is scroll up, get that link. The bot's been posting in the chat, and you guys can check it out. We'll see y'all later. Bye.